And like I told the Lucci interviews, I was a byproduct of the internet craze. And at first it was great, but the reality is nobody knew how to trade back then. We were all products of the sidewalks that were paved with gold. All we did was buy dips after 3 days of buying, and stocks would gap up 20, 30 points, and that was for about a year and a half. And then the reality struck that it was just more to that, because after 9/11, everything changed. And I said it before, and I'm not ashamed of it. I did very well during the dot-com era, but then 2001 rolled in, 9/11 rolled in. I had an office of generic trading when NASDAQ was at 5,000. And when the planes hit the building, my business completely fell apart. I lost a lot of my own money. And it took me basically about 2.5 years to figure out what trading was. And I didn't make money for 2 years. And that's the reality. I didn't make any money for 2 years. And the one conversation you never want to have with your spouse, and I'm sure a lot of your listeners will really appreciate this, that conversation. Well, Dan, you did all right. You did all right during the internet craze. It's 2 years later. You haven't taken home a single check. It's time to do something else for a living. You know what I'm saying? And when you're a trader and you hear that and you had some pretty decent success, the last thing you want to have is that conversation, because reality really kicks in. I mean, the reality really kicks in. And bad enough, during that time, I was incredibly depressed. The best parts of my days and nights were going to sleep. I used to literally certain nights just sob myself to sleep, because I couldn't believe how fast I completely crumbled down to the earth and had no control of trading, because there was no path to profitability. There was nothing. There was no guidelines. There was no blueprint. There was nobody there to help me, because everybody was in the same shoes as me, because everybody was, again, the products of the dot-com era. And again, when people ask me about how great those days were, yeah, they were great. But, it was great also when I was 16. I'm not 16 anymore. I'm 41. And, as much as I'd like to reminisce when I was 16, as much as I'd like to reminisce during the dot-com era, the reality is it's a completely different market right now. And the greatest thing about the dot-com era, those 2 years that I didn't make money, it really made me appreciate what happens when you actually go on a good run. So when I finally started making money once again, roughly around 2000, in the middle of 2003, towards the end of 2003, once I started making money again consecutively, that's when I really, really appreciated what I went through. And a lot of the new traders, I'm sure a lot of you new listeners are going through the same thing. And I always tell the people in my live webinar every single day, there's no difference between me and you. There's absolutely no difference. Trading is a byproduct of your process. I don't care who you are. You could trade credit swaps. You can trade derivatives. You can trade bonds, E-minis, whatever you want to trade. Okay, you are a product of your process, and there's nothing the market can do to you that you can't do to yourself. So once I started really figuring things out, it kind of clicked for me there. And trading, for me, in my opinion, you don't need to go back to the drawing board every single time. It's more about tweaking. It's more about recognizing what you are doing wrong and just completely stopping it. And I know for a lot of people, they're so emotionally attached to trading, and that's a whole different story. They're so emotionally attached to trading, they can't see what they're doing wrong, because they're so absorbed by what they're seeing on social media, how fantastic it is. People are on vacation, trading off their iWatches, trading under a pool. I mean, who knows what they're trading? And the sad part is there are a lot of really great people out there that will show you things, but you have to let go of all your bad habits. And that's pretty much the first stop for kind of cutting yourself off, cold turkey, and starting to the road, to prosperity.
All right, that's excellent. So what we'll do is, since you've recently done a few interviews with the guys at Sang Lucci, I'll link to those in the show notes. So if you want sort of a deeper insight to Dan's journey, sort of from day one to current times, you can check those out. So they'll be in the show notes at chatwithtraders.com. xaus.com/32. Definitely check those out. They're awesome interviews. But I'm really keen to sort of not recycle old information and get into some sort of the meat of this interview, and get into some actionable advice. So let's not brush over those few years which you talked about how you just lost money. So you were day trading, you were showing up every day to trade, and for 2 years straight you just lost money. What motivated you to keep going, and why did you keep going and not quit to go find something easier?
Here's the deal. Here's the deal. Once you taste, because you keep this in mind, okay? I grew up very, very poor. Okay, I grew up in the Brighton Beach section of Brooklyn, and it is predominantly middle to lower class people. It's the reality. And my mom was a manicurist. My dad was a waiter. My dad eventually left my mom. My mom was on welfare. So I grew up very, very poor, incredibly poor. All my friends grew up incredibly poor. And the one thing that I never wanted was to be rich. I just wanted to have enough money so I can eat. That's it. So when you go back to those 2 years, and I caught my first bit of pretty decent amount of money during the heyday, it was discouraging that I couldn't figure out how to get back to there. So it wasn't much of motivation. It was more of I didn't have any other options. You know what I mean? I didn't have any other options because I couldn't quit a business that I've tasted a very good amount of success in such a very, very short period of time for that year and a half run. And that's all it was. I mean, for a lot of people listening, .com wasn't 10-year run. It was 15 months. That's all it was. It was 15 months of the greatest euphoric. I mean, people look at it now and see, like ITK goes from 5 to 18. They're like, oh my God. When you have 25 ITKs a day, you know what I mean? They're all giving up ranges of $15, $20 a day. So it was more of desperation, man. I was hanging on for dear. I had no plan B. So my plan B was killing myself. I mean, that was my plan B. I mean, just to keep real talk, that was plan B. This didn't succeed. I was going to take myself out. And that's where the emotional hate started coming out of me. And I really took this business for what it is. It's not this euphoric love fest that everybody thinks they're in love with. It's torture. Every single day to this day, there's vomit coming out of my mouth, and these are on good days, because there's always something that agitates me about trading. And when you finally come to the realization that trading is nothing but a job, okay, you're going to treat it like a job. And that's why there are no highs, there are no lows. It's work, okay? Whatever the market gives you is the market takes, because I am a swing trader by nature. In the last 2 years, I haven't seen a run that went straight up since the bottom of 2009. So this was all new to us. Okay, this is all new. The last couple of years, this whole unicorn effect, this whole QE, it's all new to us. So we don't expect the market to keep going. So at some point, about a year and a half ago, I just stopped putting on positions. I had two positions on, 3 positions on, 5. But I used to have 10, 12, 15 positions on all the time. Rinse, repeat, rinse, repeat, rinse, repeat. So going back to kind of what my motivation was, it was a pure act of desperation, because if I didn't succeed, we probably would not be sitting here. And that's completely real talk. I've spoken to many traders that went through mentally and psychologically the same scars that I went through. And the most important part is to be strong enough to kind of wake up the next day. I mean, that really is the strongest part about it, because it's depressing, man. It really is depressing when you go from highs to lows, and you can't get back to that. You can't get back to that top of the heap again. I mean, basically, that was my motivation. Just if I couldn't figure it out, me and you are not having this conversation today.
Yeah, right. No, I appreciate you being so honest with that. So how do I say this? So you were making money initially, and then you went through a period of 2 years when you lost money consecutively. What was
every
it?
day.
Yeah, what was it that changed so much?
Well, first of all, it was that kind of wake up call by my wife, and she's like, "Listen, you got to get a real job. We have bills. The bank account is depleting. So you got to get your stuff together." And one night I remember I just opened up my I forgot what system I was using before. Was it Reuters or whatever the hell it was? And I just started looking at charts, just thousands of charts. And I wanted to figure out, what am I doing wrong? What am I not seeing? Where's the correlation? Where is the advantage? Where's my edge? Where's the ability to find something and hone a process and absorb a process that can get me, forget about to where it was 99, to get me where I can make $100. Okay, take home that check $100. Because people ask me all the time, how do I make $5,000 a day? How do I make 10 grand a day? How do I make 20 grand a day? And my answer is always the same. You have to figure out how to make $100 a day first. Okay, so my goal was figure out a process. Figure out the process. Figure out in the charts. Okay, what is going to be there that I can make $100. That's it. Where can I make $100, and we'll go from there. So I started looking at a bunch of charts, and I started back testing thousands and thousands of charts. And I noticed something back then, which is so ironically it's kind of the backbone of the whole hashtag PS60 theory. I noticed that stocks, and I didn't use the word supply back then or demand back there, but I noticed stocks used to trade in intervals. Okay, just like climbing upstairs. So, if you're going to go to the top of the Empire State Building, you're not going to jump from step 1 to step 15. You're going to go step 1, step 2, and you're going to stop. Take a breath, right? Step 3, step 4, take a breath because you're tired. On and on and on and on. And I started looking at all these things that I heard people talk about. Moving average. Well, what the hell is a moving average? I used to buy .com. If Yahoo went from 260 to 220 in 3 days, I buy it at 220. Henry Blodgett would upgrade it with Merrill Lynch, and this thing would be 250 the next day, 260 the next day. So there was no such thing as technical analysis. So I started looking at all these things. So what are these moving averages? What are they? What is this? Why are people using these things? And I put it on my charts, which I never used before. Again, it was. I mean, we looked at charts just to see the direction where a stock can go, but it was never an instance of, well, if the RSI goes to 90, it's overbought. If the MACD cross, I don't know what these things are. I still don't know to this day what MACD and RSI are. I'm not that smart enough. Okay, if a stock is up 12 days in a row, I don't need to know that the RSI is at 95. The stock's up 12 days in a row. I could tell it's overbought. So back then, it was more of, let me figure out what these things mean. Okay, and what I started noticing were that stocks go, and again, I didn't use the word supply back then, but I started noticing that stocks go from supply to supply, which we use in modern day now, and stocks go from demand to demand. And the only way they ever have a clear path to the goal line is if all these moving averages, all these supply zones, all these linear regression lines, all these Bollinger Bands are out of the equation. Other than that, they are all stocks that are trading within ranges. And people hear that all the time. Stocks are trading within ranges. The problem is a lot of new traders can't tell the difference between a stock trading in a macro range within a micro channel or a stock that's naturally, organically coming out of a channel. And that's why you see a lot of stocks hit supply. You don't even realize it because, again, nobody's ever explained that to you. Hit supply, get rejected, bam, bam, you're out of your money again. Again, you sit back and you sit to yourself, well, I'm the dark cloud. Something, the evil bug is on me. Somebody is putting a voodoo doll on me. It's not that. It's just, again, majority of stocks, they're not tradable. It's just the reality. Most of the stocks are not tradable. They all move, but they're not tradable. And the problem with most traders and most traders tell me is, number one, they have no patience. Number two, when you're a young trader, and it doesn't mean your age, you have pretty much no bank. Let's be honest. When you have, not everybody borrows money from loan sharks to trade. Okay, so normally you don't have any money. Normally you don't have any pain tolerance. Normally you don't have any technical education. What you see is on social media, which is 90% of it is all a gimmick. Let's be honest. I mean, I trade I'm trading 16 years. I've traded with some of the most phenomenal traders out there, and I know when they're struggling, when I'm struggling. I see some 22-year-old kid talking about he's hit the last 60 trades in the same market I'm trading for. It's comical, but it's okay. It's okay. I wish everybody the best. But the ironic part of trading for me and the whole mental cycle was trying to really desperately figure out what everything meant. Okay. And I just went countless hours, and then I figured out what the common denominator for stocks that were working and stocks weren't working. And what I came to find was there was an arbitrage, and that arbitrage turned out to be supply that was confirmed years later by a pivot, which I use now, and is confirmed on a 60-minute cycle, which has been kind of a godsend for me where we are present day. But yeah, man, that was I don't even remember what the question was, but mentally, man, that was it. I mean, that was that was a kind of a big deal for me at that time, out of pure desperation.
Yeah, no, that's an excellent answer. And just while we're on that subject, and you were looking through these thousands of charts, day after day, what were you actually looking at? So if someone's listening and, they're, not yet profitable, they're still losing money most, let's just say months, struggling to find a way to exploit the market, and they go through looking at all these charts, what sort of things can they look at on these charts to try and find some common denominators that might lead them to profitable trades or help find an edge?
Well, here's kind of my open-ended question, everybody. Number one, and I talked about this on my original interview with Pete Lucci. Number one, you have to figure out who the hell you are. That's number one. Okay, you can't be somebody else, and that's why I believe all these alert services are probably the worst thing that can really curb the progress of a new trader. Okay, because they're looking at social media, and one guy is making everything look so phenomenal. So when they can't duplicate the results, again, emotions kind of kick in. But you have to figure out who you are, okay? Do you want to be a swing trader? Do you want to be a scalper? Do you want to trade E-minis? Do you want to trade options? Do you want to trade, pairs? A lot of people trade pairs. They're very, very successful. Do you want to be a rebate trader? I know guys still to this day trade rebate and still do very, very well. What do you want to be? I mean, what do you want to be? And the magic answer to that question is there's nothing on a chart, okay, on a specific chart that is going to jump off the page and say, this is the right thing to do. Okay, there's nothing. Everything is trial and error. So I can tell you, hey, Aaron, look, here's what I look for, right? In a normal uptrending market, here's what I look for. I look for a stock that puts in an initial move, bases out for at least 5 days, and once it gets above that initial move, I buy the stock. Okay, fantastic, Dan. You've done everything what every other trader has done for the last 25 years. Okay, great. But here's the problem. When you look at a chart, okay, you're looking at a very gray area. You look at the top of the range, you look at the bottom of the range. In between, there's a lot of moving parts. There's a lot of gray areas, which I've discussed in nausea. There's thousands of moving parts within a little bubble, okay? And the problem is you can't just look at a chart and say to yourself, well, if the stock breaks 25, because that's the high for the last 7 days, I'm going to buy it. Here's the problem. If you don't know, okay, where your supply zones are, there could be a supply zone, right, at $25.06. Okay, stock hits that supply, and for all you guys who are new listeners who have never heard me talk about supply and demand, supply zones are, let's just use it to the upside, okay? Supply zones are where emotional buyers meet technical sellers, okay? And if you don't know that supply zone is there, you are going to get rejected 90% of the time, and then the stock is going to fail, and you're going to say to yourself, well, this doesn't work, or again, the Antichrist is in me. There's a poltergeist in my room. Something's wrong because everybody else is making money except for me. So the very bare essence of a chart will never paint the picture, okay? Because again, there's so many different grenades within that chart, within that cycle, within that channel that you're looking at. If nobody's ever sat down with you and showed you what those things are, you will never be able to even anticipate that there's a monster coming potentially out of the closet and you will lose money consecutively, and eventually, again, roll out that revolving door that many traders, unfortunately, have to face reality and go out of. So it's a very tough answer. You know what I'm saying, Aaron? It's a very tough answer. It's not as simple as, well, here's what I look for: MACD cross. Well, Dan Shapiro doesn't know what a MACD cross is. So how can I explain to you what a MACD, if a stock MACDs, right? Yeah, man. There's a lot of moving parts. I mean, there's a lot of moving parts. I think the longer you do this for a living, I think, and it kind of using in a poker analogy, I think the more hands you see, okay, the more chances then you'll figure out that how the movie ends, okay. And I say this all the time: the new trader, the modern trader, the whole the whole renaissance that we've seen in the last several years, that everybody's kind of jumping back into day trading. The reality is they're not prepared. They're not prepared for all these moving parts. They're just not. It's just a scenario of looking at something black and white, and taking it for fair value. But with all these different scenarios that are out there with high frequencies and different hedge funds placing different. I don't want to go into that, but there's a lot of moving parts, and I think what a trader needs to do is watch a lot of hands, play a lot of hands, but play the premium hands. Okay, so not every single day is tradable. As my second interview with Meyer Hoffman, he said, this market, you could sit 2-3 days and not catch a wave, and on the fourth day, like the stars and the moon, everything aligns, and you'll make your X amount of dollars. So. It's a different tape, man. It's a different tape. It's for, it really is for responsible traders, responsible adults. You could be the nicest person in the world, and I say this all the time. This is the only business in the world that, you could want it bad enough. I hear it all the time. Do you want it bad enough? Yeah, you could want it as bad as you want. It doesn't translate into you being successful. It's like, yeah, I want to be 6'2", but if I don't put on, my wife's 4-inch heels, I won't be 6'2". So you can want it as bad as you want. The reality is, luck does play a big part of it. I'm not going to deny it. Being in the right place at the right time, gave me basically a couple of years that I bought my time. I basically bought my time. You have to look at premium setups once you figure out, who you are, what type of trader you want to be. And then you really have to avoid, shooting yourself in the foot. Because again, I say it all the time, there's nothing that somebody else can do to you that you can't do to yourself. And once you figure out what not to do, I think you'll be okay. I think you'll be okay. And the most important part is it'll buy you time. It'll buy you shelf life to figure out where your specific edge is.
Okay, I really like that. That's an awesome answer, Dan. So,
are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watch a stock rip and think, I could have nailed that if I had real capital? The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, access has evolved. Now, so has the way traders operate within them. Trade the Pool.
We've talked about how you lost money, throughout that 2-year period, in quite depth. So let's talk about how you go through losing periods these days. Sure, they're not quite as dramatic as 2 years at a time, but you still go through losing periods. I mean, everyone does. So how do you stay in, good spirits? How do you keep your head up through losing periods, and how do you break out of that?
Yeah, that's a great question, Aaron. As we previously discussed, I get tons of emails all the time, and they're never asking me, well, what do you think about this chart? Again, what I think about a chart is irrelevant. The question always is, how do you make it through, man? How do you do it? How do you mentally stay afloat? And there's a great answer to that. Number one, and here's my advice. Number one, guys, turn off your P&L. Turn it off. Turn it off. I don't even know where my P&L box is on my platform. Turn it off. And the reason why you have to turn off your P&L is, number one, this whole business is all emotion versus reality, right? The more you're emotionally committed to a trade, the more chances than not you're going to completely mistrade it, and everything you're going to do in this trade is wrong, and then everything is going to happen after the trade is over is probably going to make you angrier and angrier, because eventually the trade will probably work out your way, okay? So the first thing to do is turn off your P&L, okay? Number one, and here's kind of relevant advice here. Also, you want to turn off your P&L because if you're having a good day, and I hear this all the time, Dan, I have a $30,000 account, okay? What should be my goal for the day? And my answer to that is, your goal for the day is to make it to the next day, okay, which has nothing to do with your P&L. And what happens is, when you're trading well, okay, if you look at your P&L and you say to yourself, well, my goal is $1,000 for the day, okay, and you hit your goal within the first hour or so, and then I know a lot of traders, they'll shut off their day, right? They'll completely shut off their day and they'll leave. Here's the problem. The day that you can make their 1,000, 2,000, 3,000, $5,000, whatever it is, whatever interval you trade, whatever tier size you trade, the day you can make that money really, really quickly, you don't realize it, but you're playing a premium hand. You're playing the kings, you're playing the jacks, you're playing the aces, you're playing the queens, okay? So that day is turning out to be a premium hand. And what you're doing is, you're taking a pair of aces and you're putting in a bet of $50. That's basically what you're doing. And you're telling the guy on the other that's playing against you, I'm all in for $50. And once you hit that pot, you say to yourself, okay, I'm done for the day. So you're losing out on a premium hand. Every professional trader will tell you, what we're looking for is premium. We're looking for those pocket aces. Okay, so the day that you can make 2, 3, 4, 5 grand for the first 30 minutes, 45 minutes, you're in a very, very bullish scenario, playing a premium hand. So the last thing you want to do is say to yourself, well, I'm up $1 grand for the day, I'm done. And you don't realize that $1 grand could turn into 3,000, could turn into 6,000, could turn into 10,000, because you're riding that euphoric hand. You're riding those pocket aces. And I don't care how misguided you are, everybody eventually plays pocket aces. And the most important part is, if you remove the P&L box, those pocket aces really turn out to something. On the way down, it's even more important to turn off your P&L. I already know on my tier size, and let's just use any example. Let's just use 1,000 share lots. Just make it easier. I already understand, if I'm putting on a trade and the stock goes $1 against me, I know mentally. I mean, I know I can do the math. Put on 1,000 shares, down a point, you're down $1 grand. Okay, but mentally, if you see it, visually, if you see it, that 1,000 turns into 100. Might as well turn into 100,000, because your next trade, you don't want to get down 1,200. You don't want to get down 1,500. So what you're going to do is, you're going to trade the P&L and not trade the setup. Okay, so you could be looking at a 5-star setup. A stock comes out of a 2-month range, comes out, takes a 20, 30 cent spike, comes back into your, comes back into your entry, goes down 10, 15 cents. You're already down $1,000. You're mentally already distraught. You sell the position at a 10, 15 cent loss. Next thing you know, 35 seconds later, the stock's at the highs of the day. So you're mentally already destroyed. You're done. You're done. Once you're trading your P&L instead of the setup, you might as well wrap it up for the day, because nothing good is ever going to happen when you're trading the P&L. And the more deeper and deeper you get into the day, the more erratic mistakes you're doing, the more eager you are, the more if you're a man, the more testosterone levels are rising, okay? And all you're doing is committing further and further into emotionally protecting your P&L and not trading the setup the proper way. So that's my first tip. Everybody goes through slumps, okay? Everybody goes through slumps. I had a week 2 months ago, okay? 2 months ago, I went from having one of my top 3 biggest weeks the prior week to just not getting anything going. I mean, I went through Monday through Thursday. I couldn't make a dime. I wasn't really losing any money. I just couldn't make a dime. Like, everything was wrong, right? Everything was wrong. Stocks were snapping back out of breaking down out of bottom channels on shorts. Stocks were getting rejected on longs. There was reload sellers on my longs. There were reload buyers on my shorts. Just nothing went right. Nothing went right. And I sat there a couple of days, and I just started laughing. Eventually start laughing. You can't take this business. You can't take this business to heart. Okay, you can't think that this is every bad thing is pointed at you. Okay, you'll go through these horrific times that you can't get anything going. You'll go through these horrific times. Like, perfect example. I last year, about a year ago, I don't know if any listeners remember, there was a huge run into the close on these ag stocks, these potash and Intrepid Potash and all these stupid things. And I took Intrepid Potash overnight, and the whole group was like down 25% the next day. I mean, it was just, I was like, what? Wait a minute. You telling me there's no specific company news and I'm down $4 on this trade, which is insane. And mentally I was like, well, I could try to make this money back today. Okay. Let me see what the market gives me today. Okay. Let me see, because I've learned long enough. The revenge trade does not work. Okay. Anytime you have any type of raw emotion going into a trade, you're going to mess it up. Okay. So what I learned a long time ago is there's not one bad event in your trading career that should be able to take you out of your game. Okay. Things happen all the time. Stocks get downgraded, bad, FDA news. I try not to trade a lot of biotech, especially overnight, because they blow up all the time. But the most important part of everything is I understand the highs and lows of this business because of what I went through after 9/11. So for me, when I go on a really big hot streak, I'm not impressed because I expect to make money. Obviously, every trade that I put on, I feel like I'm going to make money. I feel there's certain days I can walk on water, and then there's days I can't get anything going. You know what I mean? And those days you just say to yourself, you know what? It just wasn't meant to be. You don't need to keep on piling on positions. I could figure out within the first 30 minutes if I'm going to have value in the day. So if I'm wrong in the first couple of trades, what's the point of me keep on piling it on, right? Because it escalates. It escalates very, very quickly. You could go from being down $3,000 to being down $8,000. $8,000 turns into 14. 14 turns into 21. What's the point? Cut yourself off. Understand you're not getting a premium hand. Okay. Emotionally, there's nothing you can do. You can't cry your money back to you. Okay. But the most important part when you go through a slump, okay, just realize that, sometimes the easiest thing to do is just take a step back. Okay. Take a step back. Just watch the market. Watch the order flow. Sometimes order flow won't translate into what's going on the surface. It just won't, because order flow most of the time will not be organic. Okay, and that's where social media, that a lot of these people, tout and hype these stocks for everybody to jump in, all that stuff. So you got to just take a step back and just say, hey, look, it's just not my day. Maybe it's not my 2 days, but you know what? I know what I need. I know what I want. And until I get those premium hands, there's no point to do it. The problem a lot of traders have is just they can't accept defeat. Okay. And there's a bigger, there's a big picture there. Okay. And you go back into the theory of war, right? There's plenty of battles that are lost, right? Plenty of battles. Battles are lost all the time. The most important thing is to win the war. So I could lose a battle, right? I could fight with Tesla, and there's a reload seller sitting there at the top of the range, and the guy won't let go. The guy won't let go. And you know what? I'll figure that part out. Once it breaks the range, I'll get out. I'll take my loss. But I'm not going to lose the war on one trade. And I see it all the time that many traders are so fixated about being right instead of fixated about trading properly. And that snowballs into day after day after day until they realize, you know what, this is just not for me. And the saddest part about the whole trading cycle is most people will never trade up to their potential, okay, because they won't give themselves a chance to playing those premium hands. And they take everything to heart, and they believe that everything they do is the result of bad things, just everything bad. Somebody just has this evil eye on you. And the reality is, you know what? The market most of the times won't give you what you want. Most of the times it won't celebrate your existence. All the market wants to do is take your money and take your confidence. Because remember, I could go on, and this is a very important point. I could go on a run 3 weeks in a row, right? 3 weeks in a row, have a magnificent run. And this is how fragile us traders are. You can go 2 days without making money, and you've completely lost your confidence. Think about that. Think about how many times traders have done that. You could go on a 3-week run doing the same thing every day, every day, every day, every day. You lose money 2 days in a row. You start questioning everything you did for your whole career. Okay? And I say this all the time. You don't lose your confidence. It gets transferred to another trader. Okay? It gets transferred to another trader. Okay? Because you can't lose something that is obviously shown you promise or prosperity in the past. You're just a product of what's happening in the moment. And just sometimes we can't control what we see in the markets. So instead of snowballing it, letting it go out 2, 3, 5 days, take a step back. Do something nice for yourself. Okay? Get a massage. Okay? Go to the beach. Go to the pool. Go to the sauna. Do something nice for yourself. Okay? And when you clear your head, you come back, just watch the order flow. Is it telling you the same thing that it told you 2 weeks ago? Is it telling you the same thing, that it told you 2 days ago? What's different about this tape today that wasn't different from a week ago? Okay? And little by little, when you take the step back, you finally kind of see it in a weird way. You kind of see it. And once you see it, you can start making adjustments. And remember, at the end of the day, everything we do is all adjustments. It's one big adjustment, because I say this all the time. The stock market has been around God knows how long. What was it, 1887, 1897, whatever it was? But trading, the art of physically trading for yourself, is less than 25 years old, okay? So we are all still looking for answers. Think about that. We're all looking for answers. Everybody's in the same boat. The market changes all the time. The nuances changes all the time. Technology is changing by the second, okay? Chart patterns get obsolete. Strategies go away, okay? So we're all in the same boat, man. We're all looking for that next edge. The problem is most traders are fixated on what they think is the right thing to do. And I say it all the time. If 90% of the traders are losing money, why would you be in the same boat as them, right? Why would you be looking at the same thing? Why would you be looking at the same indicator, in the same studies, in the same matter, hell, in the same stocks? So slumps are controllable. Okay, for most of my friends, like I don't hear anymore any of my buddies for years that are going through something more than like a month. Like you can have a bad month. I mean, I mean, knock on wood, I've been doing pretty well for the last several years. But it's very common that you can go on a big run and then just things don't work. It just happens. And I think mentally you just have to get away. Go on vacation, take a couple of days off, go to the Hamptons. It's summertime. Take your kids to the park. Do something. Do something that's for you, that has nothing to do with bids and offers. Get mentally centered, man. And I tell people all the time, like, I used to listen to music every single day. Certain days I want to be depressed. Sometimes I trade better when I'm angry. So I'll listen to Sade. And that woman gets me depressed as hell, right? Can you imagine listening to Sade before the bell rings, right? Some woman in Somalia with no shoes. My God, man. I don't want to hear this, but, it gets me depressed. And sometimes I trade better when I'm angry. Some people, do yoga, meditate, right? Take Pilates, go for a run. Do something that mentally is going to make you happy. And slumps are there. They're part of the business. It's the cost of doing business. But at the end of the day, everybody goes through it, okay? Everybody absorbs them eventually, but they embrace them at the same time because it makes you go through your adjustments. And again, at the end of the day, the modern day trader or the modern trader in general is just one adjustment away from being from not being profitable to being profitable. And once you get that one edge, you ride it until it stops working.
Absolutely. No, that's an awesome answer, Dan. Thanks for really, really going deep on that. That was really cool. So I'm keen to ask you about another topic, slightly different from what we've covered already, and that would be routine. How important is routine on a trading day? Do you have a routine that you follow?
Yeah, I have, absolutely. Here's the deal, kind of putting how, generally how I look at a day. Well, number one, when there's a uptrending market, I don't even want to day trade. I couldn't care less about day trading. Day trading for me is subsidized cash flow. That's all it is. I make my money as a swing trader when there's a trending market. There's defined ranges. Everything is moving in a direction. So for me, just managing my book is the most important part. That's it. I don't care about day trading. It doesn't make a difference to me. There's scalp, Apple, Google. It's irrelevant. My core positions are my core positions. I trade around them. When they're down, I try to protect them. But in a market like this, which I believe right now is a phenomenal cash flow market, I think the ranges have been just phenomenal. I think the consolidation of these ranges have been great. My routine every day, every single day is, number one, I used to hear this, and I think a lot of traders hear this also. There's an old adage, and it says that dumb money trades in the morning and smart money trades in the afternoon. And I used to sit there and I said to myself, well, that doesn't make sense to me because I trade in the morning. And again, as I joke around all the time, I might be the self-proclaimed king of the idiots, but I'm not stupid. So by somebody telling me that the dumb money trades in the morning, I didn't understand that. Okay, I didn't understand that. But if you break that down, if you break down that statement, think about this. There's two kinds of people, there's two kinds of traders. The one that was profitable the day before and the one that lost money, right? There's nothing in between. You either lost money or you made money, okay? So the psychology behind this is the guy who made money can't wait, right? You see her all the time. Oh, I can't wait for the next day. Again, which is completely ridiculous. But that person, okay, is already emotionally committed because he or she feels that they've turned the corner, right? They turned the corner and they're waiting for day two to start trading, start putting together a winning streak. The trader who lost money is waking up and say, well, it's a new day. Forget about what happened. It's time to redeem myself, baby, right? Today's turnaround Tuesday, right? Today's turnaround Tuesday. Today's the day. So they're gung-ho. This is good. This goes for a lot of new traders, a lot of young traders, a lot of young men as well. You got your juices flowing. Again, your testosterone is off the charts. 9:30 rings. You are ready to jump out of your shoes, right? That damn opening bell rings. You're ready to go. So the emotional money always flows in the first 3 hours of the day, okay? One guy is playing catch-up. One guy is trying to increase or add on to what he did the next day. So the candles, if you notice, the first hour and a half or so, 2 hours or so, the candles are much more exaggerated to the upside and to the downside because people are chasing chasing the rainbow. Okay, one guy is trying to play catch up to get his money back. The other guy is trying to extend his gains. Okay, so they're trying to jump on the hot stock, or jumping on the hot trend, or the hot range, or the hot news. And the biggest exaggerated moves are for the first 3 hours. So I try to, if I'm trading cash flow, number one, I already have an idea what I want to do. I already have an idea from the night before. If I'm trading GPro, if I'm trading Apple, if I'm trading the IWM, like for example, tonight, I already have a specific plan, course of action for tomorrow. So if we gap down tomorrow, right, and the market starts going red to green, I want to buy SPYs, I want to buy IWM. So I already have a course of action. So I feel that if more, for example, like specifically for tomorrow, so if I feel that if shorts are caught on a washout, and they capitulate on the bottom of the range and all the volume is, we're going to have this snapback dead cat bounce. So my mental approach for the next trading day, specifically for tomorrow, is, okay, I know what I want to happen. And if the dumb money, right, if the dumb money, as we were all taught that the dumb money trades in the morning, if the dumb money starts chasing that specific course of action, everything should be fine. Okay, and that first 3 hours will give you the biggest emotional commitment to the market by traders. Whether they're uneducated or whether they are educated is a different story. But that first 3 hours is the most important part for me. Now, 90% of my cash flow day is done by lunchtime. Maybe I'll do a trade here and there in the afternoon, but the afternoon, it's more of a positioning period, okay? Because traders, a lot of traders, they're positioning for the next day. So if you notice, a lot of stocks, and I talk about this in the live webinar all the time, a lot of stocks are pinned or pegged to their specific range breakout level. So that's why a lot of stocks, people will buy these stocks in the afternoon, and they'll go up a little bit and they'll crash, and only to see them go up the next day. Because think about it, a stock usually will put in 95% of its range in the first 3.5 hours, okay? So by the time the afternoon rolls around, it's exhausted, right? It's like you're climbing the Empire State Building. They say, hey, you just climbed 60 stories. And you're like, oh, great, I did it. It's a victory. Oh, by the way, you got to climb up another 60 to get to the top, right? You're going to be exhausted. And that's exactly what the stocks do. They get exhausted by the afternoon, and most traders will not recognize this, and most traders will commit to the afternoon session realizing that there's no money there most of the time. There's no money there unless you're trading the fades, because a lot of stocks do give up gains towards the end of the day, and that's where a lot of the stocks really get washed out, that especially high flying throughout the day, that are starting to put in lower highs on several channels. But the interval in the morning is the most important part for me. I can make my day in the first 2.5 hours and kind of babysit my positions from the morning going to the afternoon. If I have a good runner, I'll keep it overnight. But it's very, very important to me not to play catch up, okay? Because if you miss your window, like if I miss my window in the morning, knowing that the biggest emotional commitment is in the morning, I don't play catch up. I don't need to play catch up in the afternoon. I don't need to see my P&L green for the day, because you know what, tomorrow's the next day. Tomorrow's another day, and if I get the premium hand the following day, then fine. I mean, what premium can I possibly expect if I miss my first 3.5 hour window, 3 hour window? Where's my premium in the afternoon, right? If I know everything's getting pegged, where's the premium in the afternoon? There is none. You go from playing premium cards to playing the 2-9 offsuit again, and most traders just don't know that. So routine is a very, very important part. Some people love trading pre-market. Somebody loves trading aftermarket. For me, I look at it and say, look, if I can't make money for 7 hours in the day, what the hell is the point of me trading for another 3 hours? Okay, I have young kids. I'd rather spend my time with them. So a routine is very, very important. I think you can't compromise your process. I think you can't prostitute your account, okay, and put it to the fire. Trading is not a sport. It's not supposed to be fun. It's not supposed to make you happy. It's not supposed to give you a boost of adrenaline. It's supposed to be boring, lethargic, very orderly, and just treat it like a business. So routine is definitely important. Just the way a restaurant opens up every single day, they set the tables. The lunch crowd comes in. And if somebody orders, a 10-ounce filet mignon, they don't put it out on a paper plate, right? Because they're not going to prostitute their business for the sake of going through the motions. So same thing, same thing as trading. Trading is a business. You want to make sure it's functioning properly. And like every other business, you have to recognize that, number one, just to use the restaurant analogy, your crowd on the Monday afternoon or Monday evening or Tuesday evening will be a lot slower than it will be on a Thursday night, Friday night, Saturday night. And you go with that approach. And you don't subsidize. Okay, you don't subsidize to the point of clicking a mouse. You do what you have to do to make sure you're around tomorrow. And I say this all the time. I don't care what your process is. There's not one trade out there there's more important that will compromise what you've been doing as a process as a whole. So again, like when we talk about there's a lot of moving parts, there's tremendous amount of moving parts. And again, the more you're exposed to the markets every single day, the more you'll see them and you'll kind of have an idea how the movie is going to end at the end.
I like it. Awesome answer, Dan. So let's just do one more question and then that'll probably take us through.
Sure.
I mean, I have to ask you about your mentor. So Meyer Hoffman, who you mentioned briefly at the beginning. What are some of the standout traits and maybe the characteristics that you believe make him such an insanely successful trader?
Well, here it is. Meyer, we had some notable guys with us. We had also another guy that, for all you guys who are exposed to the prop world, there was a guy that I started trading with years ago. His name was Jason Lieber. Okay, Jason was a disciple of Meyer. Okay, a lot of us were a disciple of Meyer. He was a partner at this place called Schottenfeld Associates that he left, started a hedge fund 4 years ago. He took the hedge fund from like $4 million to $100 million. Okay, and he used the principles what Meyer taught us. And Meyer, and here's the one misconception. Okay, here's the one misconception. Meyer was never a guy who would sit you down next to him and say, this is what you should be doing. He was more of, you're being a putz. And what you're being a putz used to mean was you're completely doing something that is outside of your personality. So Meyer believed in the idea of stocks will go higher after they go lower, right? So your complete principle of, well, Warren Buffett, right? You buy low, you sell high, okay? Meyer's thinking was, if a stock is high, it's going to come in, and then it's going to go much higher, okay? And considering the environment we were in, time will make you right, okay? So there wasn't a specific thing he ever sat me down and said, hey, Dan, you know what? You should be doing this, or you should be doing that, or avoiding this. Because remember, we were all products of the internet craze. But what he did teach me was something very, very simple, okay? You're not smarter than the market. You're not, okay? If something's going higher, okay, it's not overbought. I don't care it's up 35 days in a row. It's not overbought. You know why it's not overbought? As long as somebody is willing to pay that price, okay, and there's a fair and orderly market, that means fair value for the stock is that price. So what Meyer used to tell me is very simple, and people used to say this all the time. When the market was finally coming in, right, when the market was coming in, and he said, whatever goes down should go lower. So in other words, Cisco, people saying all the time, Cisco is at 150. There's no way Cisco will go to 120. No way it goes 100. Won't break 100. Breaking 75? Breaking 50? No way it goes to 20. I'm a buyer at 15, right? So the reality of what Meyer's greatest influence, and I think what I really absorbed back then was price action dictates everything. Okay, my opinion means nothing. Means absolutely nothing. I could look at a chart. I could grab all the data. I could analyze it 12 ways through Friday. Okay, my opinion doesn't matter. If price action is saying something that's different than my thesis, then price action is the king. And I am not smarter than price action. As my wife says all the time, you're an idiot. You don't know anything, right? I don't know how to do anything. I would have to pay 3 people to screw in a light bulb, okay? But I did figure out this game a long time ago. And the greatest gift that Meyer taught me was that don't fight price action. Forget about the trend. Don't fight price action, okay? Price action is everything. Bad news comes out. The market absorbs it, takes it higher. Don't think about it. The market is screaming at you that they're embracing bad news. That's bullish. Good news comes out. The market is embracing it as bad news. don't try to fight it. Okay, don't try to analyze a headline. If people are selling a headline, that means they're selling the headline. That means the stock goes lower. So don't overanalyze. Be proactive. Whether that's sitting on the sidelines, that's up to you. Because I see it all the time now in this specific tape. Well, you got to be patient. Every day you got to be patient, right? The biggest bull markets, you got to be patient. Oh, you got to sit on your hands. Why? Why? Sitting on your hands is for lack of process, right? Lack of strategies. And that's why there's a big difference between what a stock picker is and what a professional trader is. And there's nothing wrong with being a stock picker. If you're a long bias guy, this is probably not the market for you. But there's nothing wrong with it. But at least proactive. Be proactive about it. Own up to it. Say, you know what? This is just not for me. And there'll be an easier day down the road. But price action is king. Meyer was a phenomenal trader. Phenomenal. I mean, he would be managing 30, 50 stocks at a time. His P&L would be up, $1 million here, $1 million there for the day. It'd be insane. And I used to be all honest, I used to get depressed looking at it because, you see $1 million, you're trying to get back and you're up like 20, 30 grand, and, which is, again, nobody's complaining. But when you start making decent money, and then you obviously get to the pinnacle of your session when you see a guy making $1 million, it depressed you. It never motivated me. It depressed the crap out of me. Holy crap! How's this guy making $1 million a day? Not every day, obviously, but he used to go on these runs, and he was awesome. He was awesome. Again, a lot of us were disciples from his tree. Listen, again, I've never been embarrassed to be. To say that I was fortunate enough to be a byproduct of the internet craze. But the sad reality is I went through so much mentally, emotionally that, scarred me for many, many years. And the ironic part of it is I started trading in the end of 98, start of 99, but I became a trader roughly around 2004, middle of 2003, 2004. So, it's not easy, guys. It's not easy by no stretch of the imagination. But the one piece of advice I will give to you, if you are committed to this business, turn off social media. Read good blogs. I'm not talking about some 19-year-old kid that made $3,000. Read, and there's nothing wrong with that. I encourage young traders. If I started trading at 19, man, it would have been great. I'm so jealous of these young kids, 19, 20, 21 years old. They're making all this money, and it's phenomenal. But, read depth. Read what, veteran traders have done. Guys like Barton Biggs and, guys like, what's that guy's name, man? A lot of these older guys, anyway, I'm skipping. It's getting late in the evening. I'm skipping a lot of names. But just read what people have gone through. Read their experiences, and not the good experiences. Nobody cares about the good experiences. Read what people have gone through. Personal lives. Every trader I know has blown out. Every trader I know. Meyer blew out 3-4 years ago from First New York. I mean, it's the reality. Everybody knows it. So everybody blows out. Everybody has rough patches in their life. You have to have good people around you. No leeches, no bloodsuckers, no yes men, no salesmen. Really understand the nuances of this business. Try new things. I hear people all the time. Well, I'm only an option trader. I don't believe in equities. Well, but you trade weekly options. Yes. Well, you do realize weekly options 75% expire worthless. Well, I didn't know that. Well, yeah, they do. Try to expose yourself to different things. Try to trade options. Try to trade E-minis if you can. Try to trade small caps, mid caps, large caps, high beta, ETFs, which I'm a very, very big believer of. Haven't really traded too much ETFs in the last couple of months, but try everything. And if you want it bad enough, sometimes it's just not good enough. It's the reality, man. I never sell dreams. I only talk reality. You can want it as bad as you want. You could be the nicest human being, but you really commit yourself to omitting all the bad things that you're doing to yourself day in, day out. And if you have a good mentor or somebody that you respect, just keep asking questions, keep on spamming them, keep on annoying them until you get it right, man. And again, you don't need to be right. You don't need to be good on everything. You just need to be good at a few things. And this market's changing. I try to tweak every single day. Like I've developed this PS60 theory. Nobody trades it but me. I stumbled on going through a couple of rough days, and by accident, I just saw something. I saw an arbitrage in the charts that I'm using to this day, and it works pretty well. But stay up, man. Stay up. Don't think you're alone, man. Don't think you're alone. Guys, we're all products of bravado, and we want to show how strong and manly we are. And I'd like to present that in front of my kids, but sometimes, man, we're all human beings. We laugh, we cry, we have our bad days mentally. We just sometimes don't want to put up with anything. And those days are what makes us us. Those are the days that makes us human beings. Forget about being traders. So, if it's meant to be, I mean, that's the cruel reality. If it's meant to be, it's going to be. But don't shoot yourself in the process. That's the most important thing. Wait for premium setups. Wait for premium hands. No matter how you trade, get that green light, man. Get that wind at your back, and when you get it, you got to push really hard, because it doesn't last long. Okay, and stay up, guys. You'll be all right. You'll be all right. For all you new guys, just keep studying, keep learning, filter out the noise, keep asking questions, and I think you'll be all right.
Absolutely, yeah. You hit on a ton of great points there, and a ton of great points throughout the whole interview. So, Dan, this has been really, really great. Thanks again for coming on, and I really appreciate it. And
Aaron, it's a pleasure, man. Thank you very much for having me.
No trouble whatsoever. So before you go, can you share with listeners where they can go to find out more about you, and also how they can connect with you?
Yeah, I'm on Twitter. I'm on Twitter and StockTwits at DanShep55. If anybody ever needs to reach me, you can just email me at accessatrader@yahoo.com. I don't dwell on Access a Trader because, just like everything else, it's just one cog in my. I run a 7-hour live webinar. I don't market the damn thing because, again, if you haven't figured out what I do by now, who I am, and the people that I deal with every single day, then you just don't get it. I think more people are impressed about the wrong things, about the bright lights. And I say it all the time. When people come to New York, they're attracted by Times Square, but the rich people don't live in Times Square. Okay, the rich people live on the Upper East Side, Central Park, and all that stuff. So, you can get in touch with me. I'm pretty accessible, hence the name Access a Trader. We do run a live 7-hour webinar, which we go through live scenarios every single day. Everything is laid out in front of you. There's no trick photography. There's no editing. We have a great group of human beings, a lot of older people who really get it. A lot of people who get it. And, it's a cool place. It's a cool place, and started out as a kind of a hobby 4.5 years ago, actually turned into a business. And like all my endeavors, I try to make sure I don't prostitute the product for anything. So feel free to check us out. But again, I don't market it a lot. And, everybody knows where we are. So if you need to stop by, ask us some questions, check out what we do. My pleasure. If not, we could always be social media buddies.
Good stuff. Well, I think everyone's going to really, really enjoy this interview. Thanks again, Dan. And,
awesome, Aaron.
Take care, and let's talk soon.
Thanks, buddy. Have a great evening, guys.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
What would your trading look like if capital wasn't the constraint? That's the reality for most traders. It's not skill holding them back, it's size. Trade the Pool changes that. Step into the U.S. equity markets with up to $200,000 in buying power without committing your own capital. Full access to stocks and ETFs, long or short, executed with the precision and freedom serious traders expect. Your performance is measured by one standard: disciplined risk management and consistent execution. Meet that standard and you operate at scale. No subscriptions, no ongoing obligations, just a clear path forward. For those ready to trade beyond limitations, this is the next level. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Guys, what's going on? Welcome to the 33rd episode of the Chat with Traders podcast. Thank you very much for tuning in. I'm your host, Aaron Fifield. Now, this week, our guest is an equities trader from Southampton, UK. His name is Chris Sayce, and his journey to becoming a trader kicked off roughly 7 years ago after his interest in markets was piqued from reading through a book about stocks. While these days Chris has found his edge, he did spin his wheels for several years to begin with and also managed to run several accounts into the ground. During this time, one of the greater turning points came when Chris found another trader who was willing to pass down his experience and offer him some much needed guidance. And as we all understand, to have a mentor on your side is extremely valuable. So I asked Chris a number of questions around this subject, which I'm hoping you may find helpful. We also discussed the importance of repetition in your learning, how to build discipline, and also touch on some mindset challenges that can be early roadblocks for developing traders. I feel like many of you listening will find Chris's story to be relatable, and I'm pretty sure you'll take away a few important lessons from this interview. So let's get into it. I'm Aaron Fifield, and here is this week's guest, Chris Sayce. Hey Chris, awesome to have you on the show. How's it going?
Yeah, good, thanks. How are you?
I am very well. Besides the fact that it's freezing cold here this morning, I'm doing really well. But so we've been speaking for a while, obviously before we hit the record button. And I'm excited about some of the topics we're going to discuss today. Some of those topics being mentorship and psychology. Mm-hmm. The psychology is something you've really emphasized, so I'm keen to hear more about this. But first of all, we want to hear about you and where your trading journey began. So I guess my first question would be, what were you doing prior to trading and what inspired you to turn to the markets?
Well, it's about 7 years ago. I had a small business, and I had Christmas time off. It wasn't in it wasn't in the finance industry at all. It was doing something completely different, and have absolutely no past experience with the stock market at all. No friends, no family really into it, other than I guess their pensions or whatever. But I certainly wasn't involved with anything. And just one Christmas, I had some time off. I went into a bookshop and I saw a book on stocks. It was, a silly title of how anyone can make money or something. And I just bought it for fun. Started reading it, and it sounded quite interesting. So I opened up a demo account with a company. Saw a share, but bought it. forgot about it for a few days, and came back and found out that I was I don't know, £1,600 up or something, and figured that's not a bad way to live. I haven't done anything for a few days. So I kind of, finished reading that book and opened up an actual account and did exactly the same thing. Saw the exact same share drop. I put £500 in, bought it, and about 8 hours later, I got what I now know is a margin call. Anyway, I just closed it out and made a loss. Put another £500 in. Did the same thing with something else, and that was basically kind of my start. And from there, I then just kept buying books, kept trying to teach myself on the internet, and it just went on like that for a while. Kept kind of blowing up, but I didn't really realise what that was at the time. And it was probably a good few months down the line when I got a charting package, and again, at this point, I didn't know anybody who deals in shares at all, so I couldn't ask anybody at all. That kind of came later. So, like I said, I got this charting package, and once I learned how to use it, was kind of looking through it and started to see recurring things. And that it kind of took a long time to really kind of understand what I was seeing. But again, teaching myself, I kind of got eventually to the easiest way to describe it is just what the system was, which was it was buy a breakout and use a 480R stop and hold it for a long time, and it looks like you make money on it. That was basically what I saw, but I can describe that now because I know what it is. I didn't know then what it was, if that makes sense. It was just something that I saw within a lot of shares. So I guess really the path to that was just looking at lots and lots of charts. This thing had everything from US stocks to UK stocks, and all of them. So there were thousands and thousands of charts. So you really kind of got to learn, what charts look like, and again, like I said, what these patterns were that you see. And predominantly, it was trending. It was from bottom left to top right. That was what I was seeing. But how to trade it was I didn't really know at the time. And then I guess I stumbled across one of Michael Cavell's books, and I remember reading it, and I remember it made no sense to me whatsoever. The only thing I could really work out was that the charts looked the same, but I had no idea that there was this thing called trend following. And it was only when it was one of my aha moments when I kind of realised what it was, and I then started looking it up on the internet, and that was really when I started to kind of accelerate a lot. And then I found a mentor online, and he helped me out a lot with it. And he had his own system, which I tried to adopt, and probably couldn't really, wasn't mine. But ultimately, all that experience led to how I trade today, really. So that's kind of a brief history on it.
Yeah, no, that's really good. So we're going to get into that a little bit deeper. So let's just sort of take it right back to the start when you sort of picked up a book. It was kind of random, started reading it, and shortly after you started, obviously you had your demo account, which you did well. You put live money on the line and lost it. I'm curious to know, what did your partner think of this at the time? Like, it was a little bit random, it was sort of something out of the blue that you hadn't really talked too much about before, and now you've just sort of started trading, and you've started losing money, $500 at a time. Like, it starts to add up. What did your partner make of this?
Well, at the time, it wasn't a huge thing, because it wasn't a lot of money. Obviously, no one wants to lose $500, £500, wherever, but it wasn't big money that was losing, and also I didn't know what I was doing. And I think probably because I had the business, don't get me wrong, there wasn't loads of money coming in from that, but ultimately, I used to make decisions daily that I wouldn't consult anyone with. that was just the nature of what I did at the time. So I certainly wasn't putting in £500, and that was being used to pay the mortgage. Obviously, in hindsight, it's very easy to turn around and say, don't obviously get risk money that you can't afford to lose. But at the time, I didn't know that. And the same as if anyone else, starts in the same way, they won't realise what any form of money management is. So I guess in that sense, I was quite lucky. I'm quite lucky that I didn't go and put thousands and thousands of pounds in, thinking that I could have traded it up like I did with that just one trade at the beginning. So yeah, that was kind of fortunate.
Yeah, I mean, that's a good point. So even then, when you did sort of run a few accounts into the ground, even though they weren't, big accounts, like you mentioned, that you were just sort of starting out small, what was it that sort of motivated you to keep pushing on? Like, why did you not go, this doesn't work, or this is too hard? What was it about it that sort of motivated you to keep going?
Probably stubbornness. I'm quite competitive anyway, and I think it was that when you first start, I think you kind of start off with this idea that you can make a lot of money doing it. Now I made thousands on that first trade, the demo account, which like I said, it wasn't real money, but it was wow, I made money there. And I didn't do anything. I didn't physically have to go to work and kind of, do X, Y, Z. I literally sat at home for a few days over the Christmas period and made money. So I think it was that drove me. Then it was the game. I've always enjoyed strategy games, and it was the market to me is like the ultimate strategy game, and you kind of realize that when you first start, and then of course you couple that with the fact that you can make you make some money out of it. It probably is what kept me going. But I must admit, I've never thought at any point about this isn't right. I think it was just something that I first started and kind of clicked with straight away. So I guess I was fortunate there as well.
Okay, sure. So you mentioned that you, of course, read this book right at the start. Mm-hmm. Later on, you sort of read one of Michael Coville's books. Was there anything else in between there that you were really getting stuck into and studying, besides just looking at charts? Was there any other sort of resources, or did you do any courses or books? Like, was there anything else that you were learning how to trade from?
So I've got a ton of books, probably 100 trading books now, and I did used to buy quite a lot of them, but it was that none of them really made any sense at the start. One book that really did, and actually this was probably just before I read Coville's book, was one of Van Tharp's books. Now, they are a bit deep to start with if you don't kind of understand it, but it kind of brought into play a few elements of a strategy, risk management, psychology, and that was what then kind of, it probably started me on the track of okay, there must be some sort of formula to this. And I guess ultimately then that might have been the start of looking for a holy grail. Obviously I know that doesn't exist now, but back then it was probably those little things that kind of started me getting more interested, and that was where I thought about getting the charting package, and then ultimately I guess it was throughout the time there's been lots and lots of books that I've owned that I've read and picked out little bits from. I've never done any courses, and the internet was obviously helpful because of that. You can type in anything, you type in trend following, you type in day trading, whatever, online, and a whole host of things come up. But I certainly didn't do a course. I didn't subscribe to anything then. It was all just self-taught, and I'd hear something or read something, pivot point or moving average or whatever option, I don't know, something, and I would Google it, watch YouTube videos on it, and just really try and teach myself everything that I could. And it's just kind of built up from there, really.
Sure, yeah, no, that's really good. So if you had to pinpoint just a couple of your biggest challenges or hurdles between the point where you were starting out to becoming a profitable trader, what would you say these were?
first of all, entering the beginner's cycle and then exiting the beginner's cycle. So what I mean is so I've spoken there about how I've heard a few things, risk management, strategy, psychology, etc. Those are kind of the beginning of where you realize, okay, so there's something in this. So before a strategy might be buy this because it looks nice. I don't know, whatever people do when they first start trading. But then you realize actually that there is some sort of strategy in this. And as I mentioned before, what I was actually doing it to start with was buying a breakout. That was my first kind of strategy I ever put together. And it was basically putting that bit together, and then after a while trying something different. So let's say the entry point was a breakout, the exit point was a 4 ATR. I then might try a 2 ATR. I then might try, I don't know, something else. Selling when the price has gone up for 3 days, and it was all that tinkering around that then leads to reading more books, which have then, of course, got more strategies in. The internet is full of strategies as well, not to mention all the ones you can pay for. So you're kind of going around in this circle where you're really not focusing on your strategy at all. You're tinkering constantly, and that's just not a way to trade. And when you realize that I think is when you exit the beginner's cycle. That's when you really then start to focus on yourself. You start to focus on your strategy, and that's really, I think, that was when I started to become consistently profitable.
Okay, good one. And at what point did you? Well, first of all, let me ask, from when you started to when you became somewhat consistently profitable, how long was that time there?
Maybe 4 years, 5 years, 4 years, I think. Like I say, I've been quite fortunate. I haven't lost a ton of money purely because I did have a few big winners to start with, and probably the one thing that I've always been just generally in life is that if things are too good to be true, they generally are. Now, anyone that can guarantee make you money all the time, you're very wary of those people, and I think it's been that's kind of constantly kept me going as well, because you can't make a lot of money with we're talking like 100% gains in a day kind of thing. There's got to be a downside to that, and of course there is. That was just very, very bad money management, and I didn't realize that at the time. But it was that instead of getting euphoric and thinking, brilliant, I'm going to do this every day, I'm going to be a millionaire by the end of the year, I think I was more cautious and thinking, okay, well, I've made some money now, how have I done it? And I think it's constant reflection on what I was doing that probably kept me going. And it probably kept me in the beginner's cycle a lot longer than I would have hoped for, because of everything I was doing. I was then reflecting on, and I might actually change something. And ultimately, I did it. I have ended up pretty much with a system that I very first started off with.
Okay, excellent. So, in that case, at what point did you feel comfortable to focus your attention purely on trading and let go of the business?
Well, I still do bits now for it, but I certainly my trading is what I do on a daily basis. I've got a few interests elsewhere that I do as and when I can, but yeah, I rely on my trading. And I guess it was just when my account got big enough. I'm confident enough in what I do. I know it works, and now it really is just a case of continuing to do the process that I know works, if that makes sense. So I don't trade intraday or anything. I use end of day charts predominantly, and the daytime I spend either working on myself and how I think about the market, and reviewing what I've done, particularly reviewing trades. That was always something that I've been quite big on. I've always had two portfolios, and one is the real one, And the second one is one that I call discipline. And that is my make-believe one. That is, if I had done the trades like I was supposed to have done and didn't do anything wrong, that is where all the gains are in there. And that one, incidentally, is about 400% above the one that my real one. But that's what keeps me going. By looking in there, it was okay. That I can show you trades from several years, or 3 or 4 years ago, where I might have sold on a dark day, when I really shouldn't have done, got scared out of a position, and it ultimately went on to be a huge winner. I've got lots of charts like that, and again with the word discipline written in the middle of them, so that kind of keeps me focused.
Okay, I really like that. So you've got obviously your live account, which has funded real money in it, and then you've got, how does that other portfolio work? That's a demo account, is that right?
Well, it's you can. So I've got several accounts with different brokers, and the chart package that I use, you can keep tracks of your portfolio in there. So I've just got 2 portfolios in there, and like I said, one is the real account, and the second is the discipline account. And like I said, I really wish it was the discipline one that was the real one, but it keeps me, like I said, keeps me focused, and keeps me, every time I go to make an exit, I do kind of have a look through that chart and make sure that it is a valid exit. I'm not just doing it because of it's going down and I want that money. It needs to be the right exit. It needs to be part of my strategy. Otherwise, I've got to keep hold of it. That's what the plan says. The plan makes money. It's not me. It's the plan. So I've just got to stick to it.
Got it. Okay, so it's a feature of the software. I really like that. That's such a really good idea. I appreciate you sharing that with us. Now, from the few things you've mentioned to me offline, I get the impression that repetition is a key ingredient to your development as a trader. So would you be able to shine some light on the importance of repetition to you, and how you continually go over and revisit material that you study over and over again?
Well, see, I think with the internet being how it is, Twitter in particular, there is so much on Twitter that is really good. There's also so much on there that's utter nonsense. So you really need to kind of have a kind of very, very good noise filter. But I went into trading many years ago with a set of beliefs, whatever they were aren't important now. And the same as you will, and anyone else who's listening has got their beliefs about the markets, about however they trade. And when you read a book, when you talk to someone, whatever it is, you're ultimately you're gaining more information, and your beliefs might change. And I think that the repetition part is just kind of going back over everything that you've done. And whilst today you might, whoever you've been chatting to, or whatever you might read or watch on YouTube or whatever, might be conflicting to those beliefs, sometimes you need to just go back and look at everything you've done in the past and either discount what you've been told, or does it add any value to your portfolio? And this is where, like I said, my discipline portfolio comes in, because every day I look through it. Every morning I just go through it when I'm, like I said, I don't trade throughout the day. So I'm quite fortunate that I get a lot of hours to really just work on my psychology and work on my, my strategy really. I'll just look through that portfolio and see what does a good entry look like? What does a good exit look like? And deeper than that, what does a pullback look like? When it's quite easy, of course, when your portfolio sits at all-time highs. But what does it look like when you've had a 10% drawdown or something? How does that look on? Let's say on this software package, it graphs your profits. So I like to go back and say, what does my chart look like when I'm in a drawdown, and see it. And then, of course, I fast forward it and I go, okay, so it looks like this now. And when it picks up again, it will look like this. And so it kind of reassures me that the drawdown isn't anything, to worry about. It's just part of the trading plan, or, part of the trading process, should I say. And I think that really helps, or it helps me anyway.
Okay, sure. That's really good. So Let's move this along and get into some discussion about mentorship and the impact it's had on your trading. So, if you could start by telling us how you met your mentor and what actually motivated you in the first place to seek out a mentor.
So, to start with, it was that I knew I was onto something with the charting software, and like I said, seeing what I was seeing, reading a few books, and I just didn't know how to put it all together. And that was when I was really just looking for it sounds quite sad actually, but I was looking for someone to talk to, because I don't know any traders. I do now, but back then I didn't. I just had a ton of books, some information, some charting software, and it was so much chaos that I was kind of, I didn't know if what I knew was the right thing to know, if that makes any sense. I just, if someone was there going, yeah, no, you're spot on there, but you should have a think about this and this, or whatever, it would have made things a lot easier instead of having to try and figure it out myself. So I knew that what I was interested in was trend following. So I Googled it and found my mentor online, and I sent him an email. I think we spoke on the phone actually for a long time, and I eventually, he agreed to mentor me. He came down to see me, and he showed me his style, and this is probably where I'd say I made a mistake and probably extended my learning period by a good 6, 7, or 8 months or whatever, because I immediately kind of threw out the window what I'd been working on and adopted and tried to adopt his system. And it was then that I started tinkering around with things, and that was when, they say about, you find a system that suits, and that was really what I wasn't doing. I was playing around with his system, and so eventually I went back to what I was doing, and this was where I found the mentorship invaluable, was when I started explaining things to him like that, and instead of him kind of telling me, no, you're doing it wrong, he would ask other questions. So let's say he traded a breakout and I happened to buy it on pullbacks. That's my favorite strategy. And instead of him saying, oh, well, a pullback is an exit signal, in his strategy. But of course, for me, it was my entry. So he would then ask, okay, so where do you define your risk? Where do you put your stop? And he would ask questions like that would actually get me thinking about my strategy, as opposed to feeling that I needed to justify why I wasn't using his, if that makes sense. And that was kind of what I thought, what I think a mentor is actually really valuable.
Yeah, okay. So you mentioned that you found him online. How did you find him online? Did he have a website or a blog, and was he offering mentorship, or did you sort of approach him about this?
Yeah, so he ran a blog, and it was a paid mentorship. You can follow his signals if you wanted to, which a lot of people, I know there's a lot of services out there that are like that. But I guess to start with, that was what I did. But it was when I met with him and spoke with him that he wasn't just selling. He wasn't selling signals. If that, you can do that. That's part of what he does. You could just copy what he does. But that wasn't what I was about. I was looking to become my own trader, a trader of with my own kind of set of beliefs and strategy, etc., and do it for myself. He would, and with him, you could trade your own pension fund and just copy his trades entry when he said, he has a Twitter feed as well that you can enter. And that's what I think, there's quite a lot of services on the internet that do. But it was when it came to the mentorship, he really, really did go in, help me out and help me understand what I was trying to achieve with my system. And that was when he kind of put his system aside and helped me develop mine and asked me questions about it. And then also, tell me things to consider. So, maybe consider the risk part of it and, that kind of thing, really.
What's the kind of level of interaction between yourself and your mentor? Like, is it sort of scheduled once a week that you have a Skype call, or like how often do you guys communicate, and how do you go about that?
Well, now we just communicate, via Twitter or Skype or whatever, just for kind of fun, just talk about the markets, emails or whatever. But during the kind of the learning process, all the time, he has got a protected Twitter feed that you become part of, and there's a load of other traders on there as well, and he kind of, you'll all be tweeting throughout the day. Equally, he used to ring constantly, maybe once a week or whatever, to kind of see how you're getting on. Is there anything that you can help with? Via email all the time. And depending on where you are in the country, he would come and see you. He really was, it was kind of, he was being a mentor. It was unlimited. It wasn't a service that was kind of, one email a day or whatever. You genuinely did feel like you had someone on your side that was helping you out, which like I said, I think that was good, especially when you first start, because you've got so many questions. I mean, I used to email him constantly, particularly on down days, big, let's say that the recent pullback in the markets, that kind of thing years ago I would have got scared out of big time. And, now you kind of on days like that, you speak to him and it's almost like that little bit of reassurance, actually, no, just hold on, because your strategy does cater for this kind of thing. Look at a chart. You wouldn't be able to tell when the Japanese earthquake hit, or you wouldn't be able to, because of the trend has gone from bottom left to top right. It's incorporated all of that, and it was on days like that you kind of needed a mentor, and that was what I found really good. He wasn't, you wouldn't ask a question and have to wait 4 or 5 days for an answer. It was like, it was straight away, really, which is a really good service.
Yeah, that's really valuable. And I mean, pretty much most traders coming up need someone like that, who can be there for them. So just maybe in sort of summary, some of the highlights or standout points, like what are some of the lessons that he's passed on to you which really helped you to see things a lot clearer?
Risk management, more than anything. More than definitely kind of not entering too many trades at the same time. He trades a shorter system to me. They're kind of not necessarily relevant to my system, but for his, I would say, he would teach you that, not to take too many trades on the same day, because of, we all know that can, if you've got one or two, you shouldn't enter 4 or 5 trades in one day. All of them are showing, a loss. Get and enter another 3 or 4 the next day, another 3 or 4 the next day. That kind of thing. You need to stagger it. You need to kind of enter a couple, make sure that they're kind of they are making a profit, and you can kind of build up from there. That was a big thing. You don't have to trade a lot. You really don't, to make really good money. I think his blog site, I haven't checked it, but it was something. He's up something like 400% in 3 or 4 years. So he's doing very, very well. And he's been sat out of the market for the last 4 weeks, I think. And it's things like that is absolutely invaluable, to kind of realise that you don't have to trade every day at all to make really good money. And you combine that with the right risk, and like I said, you've got a very profitable system. The other thing was understanding that actually you don't need to risk a lot of money to make a lot either. He risks 2%, which is actually quite high, I think, but 2% of your account isn't a lot, and yet this is a guy, like I said, who was making 400% and risking 2%. On each trade. So that again was important. But the main thing was the psychology, was teaching you to probably have faith in your system more than anything. That your system works, of course, that gets into a whole other topic about, system testing and all that kind of thing, but we probably won't go there. But, your system works. So you just need to have faith in what you're doing. And like I said, go back to the dark days when the market's down day after day after day. And you really, you're probably then thinking, well, this system doesn't really work. I might go short, but it's short in an uptrend is a silly thing to do. And the other thing is, well, does the system really work? Has it stopped working? There's all these things. Trading is full of kind of things that kind of counteract, counteract that, like arguments. But it's days like that he would then reassure you a bit more in the early period. And that, like I said, that I think is really, really important.
Absolutely, yeah, that's all really great. So yeah, thanks a lot for sharing that, Chris.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory exchange and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watch a stock rip and think, I could have nailed that if I had real capital? The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, access has evolved, now so has the way traders operate within them. Trade the Pool.
Now, I'd like to steer the conversation in the direction of your style of trading and sort of your methodology. We've kind of talked about it a little bit, but just maybe give us an overview of your actual approach to trading. Okay,
so probably my routine is the easiest thing to describe. Is that I don't use scans. I just don't. I think that's probably come from the early days of just looking at charts and trying to figure things, trying to see things. But in the UK, the FTSE 350 is 350 stocks, so that's not really a huge amount of stocks to look through. So I don't use scans. I look through all of those at least once a day, sometimes 3 or 4 times, and that gives me an overall state of the market. You'll be able to see off that. For example, are a lot of stocks consolidating? Are a lot of stocks selling off? Are a lot of stocks breaking out? Are they breaking out and failing? Are they pulling back and giving a lot of reversal signals? So that kind of, I think, gives you a very good understanding of what's going on in the market. And then I would plot support and resistance on charts. And obviously, you could then combine that with kind of, I guess, like a Davis box method or whatever. But, I don't draw the boxes, but you can see support and resistance if it's getting higher, like a ladder or whatever. That's the start of a trend. I've got plotted on the charts the 50, 100 and 200 day moving average. And I wouldn't use those for an entry, but obviously you can then, that gives you a feel for the stock. And every stock, I think, is different. They have a different buying and selling pattern. some stocks don't pay any attention to moving averages at all, but they do pay attention to support and resistance. So therefore, that gives you a good place to either enter, also gives you a good place to exit. Some stocks do absolutely hug the 50-day moving average, and as soon as it closes below that, and maybe 2 days in a row, the kind of character of that stock has changed, and that then would be an exit signal. And some stocks don't pay attention to anything, and that for that I may just have like a volatility stop, so like a 4 ATR. But ultimately, I buy on pullbacks. I look for things that are already in trends, and I enter on a pullback, but the pullback must be to an obvious place. So, like I said, it must be a moving average, or a support, or a support line, and then ultimately, I like to see a kind of reversal candle in there. Just something that shows me. My favourite ones are kind of a really nice spike down with a bit of volume on it. I don't really trade volume, but that's kind of a pretty good kind of pattern for me, and that then gives me a good place to enter. Shows me that buyers are stepping in, and it gives me a good place to put my stop. So I kind of get all the things that I need out of that, and then I just, like I say, ride it up, and hopefully hold it for a long time. Ultimately, though, if it closes below that entry point, I'll sell it very, very quickly.
So you said there, hold it for a long time. What would your average, sort of generally speaking, holding time be for a position?
Well, hopefully months. That my big winners I've held all through the recent crisis, and most of them are back at all-time highs. I find with trend following, particularly on stocks, I don't really know about forex and futures markets. I mean, I know what they are, but I've never traded them, so I can't really comment on the characteristics of those markets. But particularly in stocks, when they go wrong very, very quickly. Kind of staircase up, elevator down all the time. So you've got to be prepared for that. But you find that if you enter on a pullback, it will very quickly tell you if you're wrong, like possibly even the next day. So you need to be prepared to exit very quickly. But then it's just a case of holding, and then I would tend to add on the next pullback, and the next one, and the next one, and the next one. And hopefully, like my biggest winner is maybe 14 months old at the moment, and luckily it's showing no signs of backing down at the moment.
Nice one. That's really good. So before sort of adapting this, I don't know if you'd call it a swing trading sort of methodology, or it's sort of borderline position trading if you're holding for a number of months, I guess you could say. But did you ever attempt to trade intraday, like day trading? Yes,
and it nearly drove me mental. I couldn't believe what I was experiencing. I certainly believe that you've got a mental capacity, an emotional capacity, and whatever you want to call it, 100% or whatever. And I just couldn't make that many decisions in that day, and let alone do it 5 days a week. I really would love to go and sit in a day trader's office and see how they do it, but I saw there was something in pivot points, and I tried to do it, and I just couldn't. It really kind of it really messed me up in my head, really. I'm in a very good place in, psychologically, and I like trading end of day data. I like seeing, I've mentioned before about breakouts. I think breakouts that they break out in the first hour of the day, I'm a bit dubious of them. But if you see something that's held on to its gains throughout the day, I think that's a solid entry. And I was trying to do that, but intraday on a 5-minute chart, and I really couldn't. I couldn't make that many decisions. I couldn't enter, exit with a loss, enter, exit with a loss, enter, exit with a loss. You get the pattern there, and then get 2 or 3 winners throughout the day, and have to do that 10 times a day. I'm sure that day traders can tell me they don't trade that much, but this was what I was trying to do, and I tried it for a couple of months, and like I said, I just couldn't do it. It really made me mentally tired. And so I have to be more long term, and that goes back to finding a system that suits you. I'm sure you've had people on this show that they would think about how I trade, and think I'm crazy. I don't have to look at the markets throughout the day if I don't want to. I just do it because I enjoy them. I really can make all my decisions based off end of day data. And the rest of the time, particularly in the last few weeks when it's, news has been, the market's been kind of headline driven, I've just turned everything off and come back at the end of the day and seen which stocks have held up and which I've had to sell. And I couldn't do that with day trading.
Yeah, I mean, that's a fair enough point too. So you've mentioned a couple times or a few times throughout this interview that the word system. So just so we understand, how systematic is your trading?
Okay. Yeah. So, system is in nothing is let's say robotic. It's certainly not every stock that does this I must enter here. Every stock that does this I must exit here. It's completely discretionary. So I do I stalk a number of stocks that are in uptrends. Some of them are sloppy uptrends. But I look for those periods of kind of exhaustion with on a pullback. I do trade breakouts occasionally, but I'm more successful trading pullbacks. And the only thing that is, I would say, systematic, but I guess that's to the point where I absolutely will exit, is when my stop is hit, and that will be decided before I enter. So, like I said, there's one stock recently that I was in that hugged the 50-day moving average. So the easiest place to put the stop is below the 50-day moving average, or close below it, or if it was. This is where the discretion comes in. So if it closes below it and it closes on a pretty big candle, or it closes on it closes at the bottom of the range for the day, then I would just exit straight away. If, for example, during the day it's put in, there was kind of a wick on the end, I might say, okay, well, I'm going to exit as soon as it goes below that wick. So that kind of, in case a market maker has been pushing it around for whatever reason, because of course I'm not the only person looking at this stock. There is a lot of people that would notice that the 50-day moving average doesn't get breached a lot. So it's a very easy way to put your stop, and then just try to make sure that I'm not one of the weak ones that gets pushed out, and then obviously it motors on ahead, which has happened before. Equally, like I said, if it's support and resistance, then that's my exit. I'll know when. I'll decide that before I get in. So that's probably the part that is, let's say, if there is, systematic. But like I said, ultimately it is discretion. But there is one thing that I would point out on that, is that as much as it's discretion, and I have just commented then about sometimes I might look at my exit. There's no way I don't hold a losing trade. So I wouldn't, there is kind of scope there to interpret that as, he might, a stock might have dropped to whatever price level, and he might be in denial about it. That's absolutely not what I'm saying at all. I'm just saying that occasionally, they go back to Itsukoto, follow your rules, know when to break your rules, that kind of thing. It's just a process that I know works for me, but there is no way that I would hold a losing stock if it's gone past my exit.
For sure. Okay. So, how do I say? So, how did you know, or maybe I should say, when did you know with a reasonable amount of confidence that you'd found an edge, that what you were trading actually worked? Like, when was the point when you were comfortable with that approach?
Well, my account value, really. It was, I track my equity curve, and it goes from bottom left to top right. It doesn't mean that there are some, drastic pullbacks in that, but I could show you over the years. You can see they've got less and less. So ultimately, money is the way that that will show, that will tell you when you're right. I think I know that my system makes money. Now I know that everyone else you've had on your show, their system makes money. I'm not, there is no holy grail in that sense. So it's really just about finding a system that works. Now I could probably find one that makes more, but I don't really want to. You can obviously, once you found your system and you plot in your numbers, you know what your let's say you know what your winning percentage is, or you know what your payoff ratio is, or whatever, you can then adapt your money management to kind of fit your bigger, your longer term goals. But ultimately, it was that I was looking at my equity curve and see it rising. The other thing that was probably, let's say, one of the real kind of again, like, aha moments was. I started off with a system, and I tinkered about for a while. I tried a bit of, try the day trading thing or whatever, and tried a few other strategies. And one day I just sat down and was just frustrated and a bit like, well, how's this happening? Meanwhile, my mentor has gone on and made a ton of money, and I'm sat there with a lot less than he's made. In terms of percentage returns or whatever. So what have I done wrong? And that's when, like I said, the psychology side really kind of kicks in, because it's not the strategies, okay? There's people out there that can trade pivot point strategies. There's people out there that can swing trade, day trade. They can fundamentally invest and make money. So everyone can. There is strategies out there for everyone. It was when I kind of went through my original strategy and looked at the initial trades and realised if I'd have carried on doing what I was doing, I would have made more than 80% more than I'd made that year, if that makes sense. It was then that I was actually like, okay, there's something in this. So what is it that I'm doing wrong? And that was, probably, the end of the beginner's cycle was when I realised actually it's really not about the system. What makes you successful as a trader is probably learning about your mindset and how you deal with your system, if that makes sense. So, for example, on a pullback, you don't, or a down, a drawdown in your equity, you don't kind of jump ship and look for the next best thing. And it's really then that you then start to think, well, okay, so I'm in a drawdown at the moment, so what should I do? Okay, so on one hand you can go, you know what, the system's rubbish, it's not working, I'm going to find something new that does work. That's, you go back to the beginning again. Or you kind of grow up and look at it from the kind of, let's say, a professional trader point of view and go, okay, is it the system? Does the system work? Yes. Okay, the system does work because it's made money in the past. What doesn't work at the moment? Is it the market conditions? And you go, yes. Or is it maybe I'm taking on too many trades, and you kind of, you start looking at that. And that, I think, is when you make a jump from kind of beginner to, let's say, more professional style of trading. You're just working on that constantly instead of going back and thinking about a whole new strategy.
So what were the certain aspects of your sort of psychology issues that you had to work through that were preventing you from sort of making potentially 80% more that year? Like, how did you, like, psychology, I guess it's kind of quite a broad topic, but how were you able to sort of pinpoint what it was and then sort of focus your attention on that to be able to resolve those psychology issues that were preventing you from making a lot less money?
To start with, it was driven by frustration. I'm sure that everyone must get to a point. There's one of the guys in Market Wizards book, and you have to forgive me, I can't remember his name, said, there was a day when he lost a ton of money and turned around and said something, along the lines of, "What, am I this stupid?" And he says, "No, you just got to keep going." And that really is kind of part of it. I knew that the systems were making money, but I just wasn't implementing them right. I wasn't doing the right thing. And that was the bit that was frustrating. Why? What am I doing wrong? And that was, like I said, you then start kind of self-reflecting and really kind of looking, well, if that system makes money, let's say one of these subscription services on the internet where you can buy, you can sign up to it and they give you the entry and the exit signals. Well, they make money they probably make money as a trader. You could get those same signals and not make money. because you might do something wrong. It might be obviously your risk management and that kind of thing. Equally, it might be you might try and preempt the exit signal, you might preempt the entry signal, and that's nothing wrong with the strategy. Although when you first start out, you'll blame that strategy. That's down to you. That's your own fault. And I think it was it's from another book that I apologise to anyone that has written these, and I'm not referencing them, but where he says about you've got to take responsibility for everything you do, and you can do this in everyday life. And this is kind of, I think, something that I tried to do a few years ago, where every situation that goes on is your fault, and it's quite a big thing to say that, but everything that happens, let's say your partner comes in from work and she's in a bad mood and she lashes out at you. How's that your fault? And you constantly find a way that is, you start then looking at yourself a lot more in detail, and particularly with your trading. Why is this strategy? Why does it make money? In back testing, why does it not make money now? What am I doing wrong? And that's when you can be honest with yourself. That, I believe, is when you're you make a massive leap in the right direction. And it's quite hard to do. Not a lot of people like being honest about themselves. I could probably list a lot of things that I know are wrong with me. One is I'm very impulsive. I've got an addictive personality. And these things, they're probably gambling is not a very good thing for me. Day trading, this is when I realized actually this isn't good, because I get impulsive, I make the wrong decisions, I jump into trades quickly and realize I've done the wrong thing, and that goes totally against my the way that I am. So therefore I need to adapt my system to fit me, which is why I don't like looking at the markets throughout the day, because if I get I might get a rush, or I might I might lose discipline. Whereas it's much easier for me to sit down in the evenings, look through thousands of let's say 500 charts a night, and just make a decision whilst the markets are shut. I'll make a little short list of what I think I want to enter or I want to watch. I might have another little look later on in the evening. I'll have another look in the morning. And if it still looks good, then I'll buy it. Equally, there have been times where you get a bit giddy because your portfolio's up, and you think, yeah, I'm going to buy that. You look at it next day and you're like, well, actually, it's kind of invalid. That's not the right entry. And you'll sit back and you'll wait. But it's only understanding that I've got that side to me that I'm able to then adapt my strategy to fit, my the bits that I would consider pretty crap about my personality.
Sure, yeah. No, that's a lot of great points in there that you touched on, so I really appreciate that. We should probably start to wind things down, Chris, but let me ask you, is there a resource or a book or a video or anything you'd like to recommend to listeners to check out if they'd like to dive deeper into sort of understanding the psychology of professional trading?
Yeah. I mean, there's... Firstly, just keep rereading books that everyone else mentions. I think I've kind of touched briefly in the past with you about this, that things like Reminiscence of a Stock Operator, Market Wizards, etc. There's I've read Reminiscences over 100 times now, and each time I hear something new in it. And the reason is that there is pearls of wisdom in all of this, depending on different parts of your trading journey. So Reminiscences, to start with, is a really nice story about a guy that likes trading and makes a ton of money. That's the nice story that you hear at the beginning. Then you hear about, you might hear a part of his strategy the second time you read it. The second time you might hear about how he blew an account up, but he kept going. So, you might have blown up an account recently and you think, okay, well, he's done that. I've just got to keep going. And ultimately, you just keep kind of, every time you hear it, depending on what part of your journey you're on, you'll hear something new and relevant to what you're experiencing at that time, which is why I think those books are absolutely fantastic. The second was a YouTube video that Nick Raj put up called What Makes a Successful Trader. I think it was a presentation he gave. And he talks about the two kind of facets of trading, kind of quantitative, it's easy for me to say, and qualitative, which is basically your strategy. He gives the best thing is he gives an analogy of a car. So the quantitative side would be driving the car. Put your foot on the gas, put your foot on the brake to stop, turn left, turn right, that kind of thing. But the qualitative side is learning about the roads, learning about, you get those idiot drivers that are indicating to go left. When you get that feeling, actually, they're going a bit fast to do that. So you don't pull out, you just hold back. And ultimately, they weren't going left. They just left their indicator on. And that's what I think is kind of what trading is about. You kind of learn those two parts. You learn, how to trade, and then you learn about everyone else around you in the markets. And that video is very, very good at describing it. But you have to watch it a lot to really kind of get all the points out of it. And again, I've watched it, loads and loads of times. And like I said, you kind of, once you realise that those two parts exist, you can work on one, which is your strategy. But then you should probably look at the other parts. What does it mean to you, and how does that affect your trading? And like I said, that was kind of a big thing for me.
Yeah, that's a really good video, that one. I've watched that myself, and obviously Nick Raj was on this podcast in the past, so if anyone wants to hear an interview with Nick, check out episode number 4. But all right, Chris, well, this has been really, really good, and I appreciate you making the time today to come on and speak to me and share with myself and also the listeners just a lot of really valuable information. It's been awesome, so thank you very much.
No problem.
And is there any way that listeners can get in touch with you if they'd like to sort of learn more about you, or just sort of reach out?
Yeah, you can email me. So yeah, it's I guess you put it in the show notes, but it's Chris Sace 1983 at googlemail.com. And that's a good way to reach me, really.
All right, sure. No trouble. We'll put that in the show notes. And if anyone wants to get in touch, they can just shoot you an email. But again, Chris, thank you very much for doing this, and take care, and let's talk soon.
Yeah, no problem.
You've come to the end of this episode of Chat with Traders, but don't worry, more great episodes are on the way. To stay updated with each great new episode, be sure to subscribe to the podcast in iTunes, and we'd love it if you leave us a rating and review. We'll see you next time on Chat with Traders.
What would your trading look like if capital wasn't the constraint? That's the reality for most traders. It's not skill holding them back, it's size. Trade the Pool changes that. Step into the U.S. equity markets with up to $200,000 in buying power without committing your own capital. Full access to stocks and ETFs, long or short, executed with the precision and freedom serious traders expect. Your performance is measured by one standard: disciplined risk management and consistent execution. Meet that standard and you operate at scale. No subscriptions, no ongoing obligations, just a clear path forward. For those ready to trade beyond limitations, this is the next level. Doesn't your portfolio deserve the best? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Trade smarter with advanced charting tools, backtesting, a pre-built strategy selector, and more features. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involve risks and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC.
The biggest secret of the best traders in the world is that they're just like everyone else. However, they've worked hard to learn the markets and discover what works and what doesn't. But how can you hear about these journeys and get in on the strategies and tactics they use? You can do it by listening to Chat with Traders. Here's your host, Aaron Fifield.
Hey traders, what's up? What's going on? Hope you've been having an awesome week. I've got an interesting guest lined up on the show for us today, and he takes a slightly longer term approach compared to many of the guests I've had on in the past, but I think it's great to mix things up. He's a young guy, he's doing big things, and he's got a great story to tell. So let me give you the 1,000-foot view of where he's come from and where he's going. So Michael Melasinos started a job on Wall Street about 6 months before the '08 crash came through. So he was right there in the thick of it. He was actually an analyst on the trading desk at Bear Stearns and then later at JP Morgan after they were brought out. I'm sure you're all familiar with that story. Since then, Michael's left his Wall Street days behind him and now trades a fund of his own, using a systematic trend following approach that operates on 40 global futures markets. While I missed a large chunk of the story there, you'll hear how Michael got to this stage of his career during the interview, as well as a few of the lessons that shaped him into the trader he is today, including the advice he received from market wizard Ed Seykota. I also like Michael's thoughts around why you should consider playing a game that's larger than money, and the emphasis he places on preparation is really great also. Alright guys, you know the drill. I'm your host Aaron Fifield, this is Chat with Traders, and here is this week's guest, Michael Melasinos. Hey Michael, what's up man? Welcome to the podcast.
Hey, thank you for having me.
No trouble at all. Thanks a lot for putting aside some time this morning to come on and be open for an interview. It's really good to have you on.
Yeah, well, it's 6:07 a.m. here in New Jersey, so not a lot of people are up right now. I'm probably the only person up on my block, but yeah.
Nice. Is that how you roll every morning? Up nice and early?
Yeah, because I was actually dealing with this problem yesterday. Because I was telling you before off the podcast that we recently bought a beach house, my fiance and I, and we're doing a lot of work around the house, and we still have a lot of chores. And my fiance is type A go-getter. She wants it done. She doesn't want things lingering. She loves to-do lists, doing them ASAP, and she's got me doing chores all the time. And I'm like, I need to do work, because the day rolls on, and there's just more and more stuff to do. It gives her more time to think about more stuff to do. I'm like, oh my God. Putting her bike together, doing the fence, doing this, doing that.
Never enough hours in the day.
Never enough. So getting up early and, before she gets up, is good. So this is, we have our sanctuary right now, our time to talk about whatever we want.
Good stuff. Well, I'm glad you could fit this in. So we've definitely got plenty to talk about. So let's just get into it, and let's get this started by telling us about how you originally got involved in trading, and perhaps even further back than that, what were you doing before this time?
So I graduated from college in 2006, started work in early 2007, and I started in public accounting. And that's what I majored in college. So I wasn't entering the workforce with any kind of trading job or any kind of trading, experience or background of any kind. Didn't even intern with any banks or funds or anything like that. But a couple of my uncles went through Wall Street long time, still in it as well. And just coming from a sports background my entire life, I had always interested in just competing at something, getting good at something. And after a while in the accounting job, that wasn't really fulfilling that urge in me. So, I started reading just, in public accounting, you have your busy season. I'm sure everyone knows an accountant, they have a busy season. It starts to die down probably in June. At least for me it did. So from June through the summer and then into the early fall is when I really started to read a lot especially on the commute back and forth from Jersey to New York. I was working in New York. So I had about like an hour commute every day on the train. So I would do a lot of reading then. And at work during the off months, I was reading a lot during the day. And it just became, I stumbled across, a lot of different blogs, a lot of different opinions, different this, different that. And the one that, stuck with me the most was this trend following style. And it kind of just made sense to me. And I was actually on Michael Covell's podcast maybe like a month or so ago. And I told him, when I read his first book, the trend following book, I think it was his first book that came out in 2005, and I read it in 2007. I said I slammed it shut at a few points in that book. I was like, there's just no way. Because he makes it sound so easy. He makes it sound like so simple. So this, and you know what? It is simple. At least the concepts are, and I think the concepts, parallel and have a lot in common with what happens in the natural world. Anyway, the ideas of diversification. Spread yourself out. Don't limit yourself to one type of to profit from one market, and in buy and hold, comparing it to buy and hold's case, don't limit yourself to profiting to just making money one way. Be open to going short as well. Be open to staying out sometimes. And then the other ideas of when you have a good thing going, let it roll. You're sticking with it. If it doesn't work, protect yourself and get the hell out of there. So all those things were, made sense to me just in general. And then I was like, oh, okay, now I have something that maybe I can actually try to get good at, try to get better at, because now I know, a strategy to play with, and, before that, what was I going to become, like a day trader? That's like the only other strategy I knew of, or like a fundamental thing, and that didn't appeal to me either, because that just seemed like a whole lot of work with not a whole lot of certainty, and I saw a lot of people going that way for a long time and losing a lot of money, especially in the bear markets like of 2001, and I was in high school at the time, and then I guess before that, when the like a year or so before that, when like the bubble, the NASDAQ bubble was bursting, and then. So that didn't really spark anything in me. But this trend trading thing started to make some sense to me and start to get the juices flowing, so to speak. So I started running with that, and eventually had some, light bulbs go off. And then I started getting so bored being at the accounting job that I asked my friend who I grew up with, who was working at Bear Stearns at the time. I said, look, dude, get me in there. Come on. I gotta get off. I gotta get off the bench, so to speak. I gotta get in the game. And, I didn't think I was going to become a trend follower at Bear Stearns, but, this trend following idea is like, oh, maybe I could start a fund. That was like in the back of my head. And then when the opportunity for, to work at Bear came along, I kind of put the trend following thing on hold. I was like, oh, okay, I'm going to become like a Wall Street guy, and then work on the trading desk one day, and hopefully soon, and then all will be good, and I won't have to worry about this other thing. It'll just be just something that passed the time, this trend following, thing. So yeah, I think when I went to Bear in October of 2007, I was working a lot, so I got up at 5:30 today. Back at that job, I was getting up at 4:30. I was in work at 5. So I was home at like 8 every day. So I didn't have time to read or do anything relative to any trend following strategy, construction, or anything like that to one day become a fund manager or anything. I was just doing my job because it took a lot of hours to do. So, and then I guess throughout the 6 months later, after I started working at Bear, it collapsed. So that was a big eye-opening experience for me. And then, the team I was on went over and started working for JP Morgan, just doing the same job at JP Morgan. And the hours were still insane, but the middle of the day wasn't as intense as it was. So I started reading again. And then I started getting more serious. But those two events, the Bear collapse and the financial crisis, and they really opened my eyes. And those people talk about aha moments. Those are two big aha moments that really put me on the path where I said, okay, I can't work anymore. I need to go and do my own thing. Because I thought this way, I was going to be, I thought I had it made pretty much going to Bear. It was a good company and everything, and good culture. And I thought, okay, I'm just going to, just put my time here, and I'm going to be a big shot, trader on the desk one day, and all's going to be good until it goes down. I mean, the company goes down. I didn't get laid off or anything. The company disappeared. And that was just like, oh my God. And then half of Wall Street disappeared, several months later. So those were just, blessing in disguises for me. Because now I had the opportunity to actually do what I wanted to do, in the back of it. And at that point, it was just in the back of my head. But it was really a drive at that point, because I saw it's not, my job and the Wall Street, vision of being a big shot or, it being like a good job just wasn't so anymore. The whole game was changed. Now it wasn't a safe thing. And now I saw that. So I saw a lot of my colleagues lose a ton of money, lose their jobs. And all the a lot of their retirement money, if it was in Bear stock or anything like this. And I said, look, this is not going to be me. And at the time I was 23, 24 years old. So I was still very young and stupid and impressionable, I guess. And that kind of woke me up and made me grow up pretty fast. So during the off months and, the transition period, from Bear to JP, and then even working at JP, it was just less intense, than my first 6 months at Bear. After everything collapsed, and then the financial crisis hit, things just got less intense. People were kind of just shaken up, and I don't know, I won't say it didn't work as hard. That's not true, but just kind of like dazed, like they just got punched and knocked out, and then they're like stumbling to get to their feet. So people were just, I don't know, the workload just died. So I was just spending a lot of time doing more reading and getting into phase 2 of taking the path to become a fund manager one day. And that's what I was doing through, Bear's collapse through, January 2009. And then eventually got laid off from JP Morgan. The team I was on got laid off. And then I, went to phase 3, because I had no job at that point, and I was devoting all my time to getting into the Excel, getting into the X's and O's of creating a system, not just reading about the theory of it. So.
Yeah, no, that's really good. Thanks for really fleshing that out for us. But being so young, just having entered Wall Street, you were probably only, there for 6 months to a year before things started to unfold and the crash came through. Did it ever cross your mind that maybe you'd entered the wrong industry and this wasn't gonna be?
Yeah, eventually, but not at first. At first, I was just so preoccupied with what was going on. I didn't really think at all. And it was only till after I got out of it that I started thinking that, and was starting to read, a lot of entrepreneurial blogs and books and other things that, watching a lot of videos of these up and coming startup entrepreneurs, because at that point it was starting to, there was no real startup scene then, like there is now. Like now it's like booming, right? Silicon Valley's booming, and I guess maybe other less intense Silicon Valleys out there, maybe in Europe and other parts of the U.S. But it wasn't that big back then. But it was starting to come out of that bear market into what it is now, which is a booming bull. But I was just reading and getting some exposure to other entrepreneurs outside of Wall Street, and then reading more about the trend following trader types, reading and going on their sites, the funds that were around and that are still around, but then also getting to Ed Skoda's site, checking out his stuff. I entered one of Ed's trading tribes in New York, and just taking the next steps to get in the game, to get good enough to be able to play. At that point I was still just learning, but I was taking the next step from learning from the people that were doing it and hearing what they had to say. Because as an athlete, you want to learn from the guys that can actually play. You're not going to take hitting, in baseball, you're not going to take hitting lessons from, a guy who never played the game before, right? You take it from a guy who's done it with success for a long time. So that's what I started doing. I started to get some some FaceTime with the actual traders, and then other entrepreneurs in other industries, and then I started to believe that, okay, I'm starting to see the big shift here. Wall Street's not going to be the place to be for a long time, and maybe this is a blessing. And I probably had that thought, at some point during the winter of 2009 when I was, trying to look for jobs or something, and just in my apartment reading, and in New York, it's pretty gloomy during those months. So that was kind of maybe a bright spot in one of the dark, dreary winters of New York.
Are you ready to get serious about options trading? Then join Tasty Trade, Investopedia's best platform for options trading 2026. Stocks, options, futures, and more. Tasty Trade has everything you trade, all in one platform. Get low commissions, including a $10 cap per leg on options trades, so you can keep more of what you earn. Tasty Trade is packed with advanced charting tools, backtesting, a pre-built strategy selector, and more features to help you trade smarter. Manage your positions with speed and precision using Active Trader Mode, one-click trading, and smart order tracking. Plus, Tasty Trade's stellar trade desk team offers live support during trading hours if you need it. Join Tasty Trade today and earn a double commission rebate up to $3,000 total on your stock and ETF option trades for 30 days. Visit tastytrade.com/chat for more info. All applicable regulatory, exchange, and clearing fees still apply. Options involves risk and are not suitable for all investors. Learn more about Tasty Trade promo terms and conditions at tastytrade.com/double. Offer expires May 31st, 2026. Tasty Trade Incorporated is a registered broker-dealer and member of FINRA, NFA, and SIPC. Ever watch a stock rip and think, I could have nailed that if I had real capital? The truth is, many capable traders never reach their potential, not due to lack of skill, but lack of scale. Trade the Pool was built to solve exactly that. A firm designed for serious individuals who want access to the U.S. equity markets with meaningful buying power, up to $200,000 without committing their own capital. Get access to virtually every stock and ETF. Go long or short freely with the flexibility professional traders expect. You're evaluated on one thing: your ability to manage risk and execute with consistency. Meet the standard, and you trade at scale. No subscriptions, no ongoing commitments. Whether you're still refining your strategy, a trader with experience who hasn't yet broken through, or a seasoned professional simply looking for more capital, Trade the Pool is built to meet you where you are and take you that next step further. The markets have evolved, access has evolved, now so has the way traders operate within them. Trade the Pool.
You briefly mentioned Ed, and you're referring to Ed Skoda. And I don't want to brush over that because he's a really big name He plays the big game. So I'm curious to know, like, how did you actually get in contact with Ed? What was his tribe, his trading tribe, actually like, and what were some of the things that he actually really helped you with?
So he, before, Ed to me is a rare combination of very advanced technically and very advanced psychologically. He seems to understand both games pretty well. From being, him being an engineer, he's and engineers in general, they're very advanced, mathematically, science. They get that. That's their strong point, and they're not so strong with social skills and understanding behavioral dynamics, because let's face it, a lot of engineers, like even like accountants too, and maybe some other jobs, they're good with just doing their job, and they're not so good talking about it. They're like socially awkward, or some of them can be. So he's not that, though. He to me, because he shares a lot of his information, a lot of his knowledge about things. I attracted to that quick, because he on some level reminds me of my father, because Ed's a very tough man to talk to, because he calls you out on your nonsense really fast. And he reading on his site, and then getting to one of his tribes, reading on the site about the theory about the feelings that we're unwilling to feel, so the feelings that we don't like kind of run our lives. And I was like, what the heck does that mean? I don't even know what that means. And, at that time I first came into him, probably around 24, 25. So I was still pretty stupid at the time. And I didn't know what that meant. And then, started getting into more of his FAQ on his site, which is where people submit, their stories and write whatever they write into him. And he responds. And, half the time he's being a wise ass in his responses. And the other times he's being pretty helpful and explaining what the tribe is all about, what's the whole process, what's the whole intention of it, how is it aimed to help people out. And, at its core, it's really just to help people push through their issues to get to a right livelihood, which is basically, you do what you like to do, and you do it, you serve other people. And you maintain your health, and you get good at what your craft is. And when I started in one of his tribes, initially it was a little weird. It was a lot of guys, in our tribe it was a lot of guys in the financial space, which is not always the case in other tribes. Some people aren't in finance at all. And there's a lot of guys talking about, and then, first talking about their feelings, and then, he has this process called the hot seat, where you get into, some real intense feeling that you have that you want to change. You want to change you want to change from a medicinal response to a proactive response. So in the case of trading, you get people that don't like to lose money, right? What are they? And so they medicate it by, in some cases not having, not looking at it. They don't open their statements, or they don't sell it out. If they're long a stock or something, and it starts to go against them, they don't sell it, so they don't have to feel the actual loss. They could just hold on and hope that it returns to a more profitable, position one day. So these are all non-proactive responses with dealing with the loss that is true. It's, it's happening, whether or not you like it or not, it's happening. So you can either deal with it responsibly, proactively, or you can medicate it by not feeling it. And this is what a lot of people do, in their lives outside of trading as well. Same thing if they break up with a boyfriend or a girlfriend. What do they do? They don't go to the drawing board assessing their behaviors and, what did I do that really made this relationship tumble and end. They'll say, they'll blame other people. They'll go watch a movie. They'll console a friend, an enabler who tells them it's going to be all right. It's going it wasn't your fault. Or they'll go, on a worst case, they'll go, do drugs or drink alcohol or, indulge in some unhealthy food or something to make the feeling go away, and to, justify themselves and, what happened. It wasn't their fault and all things like that. So, that's what the tribe's all about, because it helps you in a group setting. Ed believes that a group setting is better than trying to do it yourself, or it may offer a better way to just than going to a psychologist or psychiatrist or something, because you don't get to learn from the doctor doing it. In tribe, you get to see everyone work and everyone working on their own issues. So that he believes, is a better atmosphere to learn from, because you get to see other people doing it too. People get to learn and set examples for others, and that helped me eventually push through the fear of starting my own fund. I was scared. I didn't think I could do it. I mean, I knew I could do it, but I was afraid what my parents could think. Like I'm an only child, so I get a lot of questions and I get all the attention. So I was just nervous with dealing with that. My parents, they're slow and steady people that have been at the same type of job forever, and this is not something that they're used to. They don't know what starting your own business is like and the risks about that. They just think it's risky because it's you need to have a job. That's the way to go. So all these feelings that I had come up, the tribe helped me out, and learning the things from Ed, more on the psychological portion of the game, really helped me, eventually pull the trigger and deal with feelings that were previously standing in my way. Deal with them proactively and take a more go-getter approach to it, rather than just sitting back and maybe they'll go away, or distracting myself somehow. But and then like a side note to that, outside of trading, all these things help me in my life as well. And can't say enough about that, because my life in general changed after first being introduced to Ed's FAQ site and then getting into the tribe as well. A lot of people like to, Ed seems to have like a cult following, as far as like, he was the guy who, made, read Market Wizards, couple 100,000% over 10 to 15 years, whatever it was. He gets a lot of attention that way. But, for those traders out there that think that's really cool or whatever, because he makes a lot of money, or he did or something, that's all great. But I'm telling you, I think there's more to learn from him on the psychological game side, because I don't know, making money's cool, but making money and having good relationships and having a stress-free life and living a life that is fulfilling is much cooler. A lot of guys out there with a lot of money who are just miserable dudes, and they have awful lives. So to those young guys, look, it's not all about the money, and it may be a weird thing, a trader saying that because the job is all about money, but, or that's the only thing we make, we don't create anything else, but you can create a life you'd like, and, work with people that you like, and serve them well, by, getting your own issues straightened out, rather than just looking for the best system out there and emailing Ed and guys like him, like, oh, what's your system? Or teach me the system so I can go become a big shot. That's, maybe when you're young, you think that's the way until you get into it and you start trading a system or trading a style. And then you learn that, oh, yeah, I don't just need a system. I need the whole psychological game, too. I need the discipline. I need all this, the clear thinking. I need all that to make any money,
For sure. And I mean, on that point, like that's a really good point you make about how it's not all about the money. But I mean, most of the guys who kind of say that have money. Do you think it's always easier for those who do have, a big bank to be able to say things like that? Like, do you think it's a bit challenging when you're younger and you're coming up? You don't necessarily have all that money, so you've got like a safety zone, or you know what I'm saying? Like it's a lot harder to think that way when you don't necessarily have any money. Money does seem very important. Would you agree with that? And
yeah, and I would say, because I was in that position too. And looking back then, it's you likely want to make money when you don't have any and it's likely at that point a medication for the feeling you don't like of being poor. And so you think, oh, I'll just make a lot of money and that feeling will go away. And then you find, a lot of people become, maybe that drive to make a lot because you don't have a lot really helps you, make a lot one day and become a successful businessman or trader or whatever. Great. But it's a very myopic, I think, short-term view of and I say it's not a well-rounded strategy to make money and then get all the other things you want in life too. People tend to fall into that. In this case, like you're medicating that medicating that feeling of being poor. I just want to make money. I'll do whatever I have to do to make money. That's why you hear about a lot of poor people growing up. They make a lot of money one day, because they're driven. They don't want to be poor ever again. And that doesn't mean that they're happy people necessarily. It may mean that they're good at their job. They're good at their craft or whatever. But you don't hear about the other things outside of their job and work success, because that's all business people care about. You don't hear about their personal lives. They're not going to talk, like, we don't hear about Warren Buffett's personal life really, or like other successes personal life. So we don't get to see that side, and maybe it's a train wreck. Maybe it's not, maybe it's not what you would want for yourself. So, looking at just one piece of a person's life, I don't think is enough information for people to to learn from and then incorporate into their own structure, into their own vision of what they want their lives to be. If you want to just learn one skill and trade all other things for that one skill, then fine. But if you want to have good relationships, you want to be fit, you want to be healthy, you want to live a long time, and you want to have some money, and you want to have a good family and friends and all this stuff, and have a life of abundance and a vision, a well-rounded vision for what you want, then you may need to learn how to make money there. But maybe becoming a hotshot trader or a hotshot this or that works against a well-rounded view for yourself. It may not work like that for another person, but maybe for you, you need to, take other information into account and not just go for it all and try to be just the big shot trader, because you may be that one day, but you also might be, a jerk. You also might have a couple divorces. You also might, have a couple of health issues. And And I think Ed would be the first one to admit that. Don't forget he's had 2 divorces. And probably a lot of drama during his great trading run that he may not be too proud about. What I'm saying? So, the money's cool, performance is cool, great, but there's other things that matter. And I think Ed can, going to his site and maybe joining one of his tribes, learning about that process can really help people see or come to that. I'm not saying this view is correct, but it may just open themselves up to, maybe there's other ways to think about it. That's all. I'm not trying to push a way or a system on anybody or a way of thinking on anybody, but that's what happened to me, because I thought it was all about the money. I thought I was going to have it made, and then Bear went down, and then and then half of Wall Street went down. So, there's other things that become important. And I learned that for myself during those crashes.
Yeah, I like how you answered that. You touched on a lot of great points there.
Yeah, and I also tell a story about a guy who I work with at Bear, and I remember standing next to him a day or two after Bear, was bought by JP, and this is a guy who's been there for 20, 30 years, and nice guy. He's a regular guy. He just works on Wall Street. He didn't know anything. He didn't have any inside info. He didn't. He just made a little bit more money than the average guy, but he was still really nice. And we were standing on the trading floor, and he was looking at all the screens. This is when people were just half the people there who used to be there weren't there, and it was a total mess. It was like the last day of school. There's nothing going on. Everyone's just kind of talking and not doing anything. And he was looking at his screens, all the flashing lights, because at that time the markets were still wild, going, high vol and everything. But at Baird, there was no business being done. So we were all just kind of watching it. And this is after the guy knows that he probably lost a ton of his retirement money. And he's like, Mike, you see all this? And he's pointing to his screens, all the flashing lights, all the Bloombergs, all that. And I said, yeah. He said, all this means nothing. I'm going to a wake tonight for one of my daughter's or son's classmates who killed themselves because they were getting bullied at school. These kids are 10 years old, 8 to 10 or something very young. And that was another hammer over the head moment. Yeah, you're right. This is not, I don't want just the money here, because focusing on that, you miss out on some of the more important issues of, in this case, kids, how important is it if your kid just died? Really? Is it important? I mean, do you really need to have, that big trade? You need to make that big no, because you have other things to worry about. And I feel that really, that helped me, one, even further push to get the hell out of the workforce in this, Wall Street, but also helped me to really think about more, when I did pull the trigger, what kind of business do I want? What kind of life do I want? Outside of just trading my trend following system, that trend following system is just one little piece, it just helps deliver some profits to my investors. That's it, but, incorporating some of the other more qualitative, aspects of life, into my picture, my life's vision picture, that moment with that guy, really helped me at least be open to thinking about stuff like that. I didn't, starting the money hungry grip started to loosen a bit after that conversation.
Yeah. Well, that's really deep. Thank you for sharing that with us.
Yeah, it was pretty gloomy, but I mean, they're real things.
Yeah. Well, I mean that helps put things into perspective, doesn't it? And look at the bigger picture. Now, let's turn this discussion more towards your actual trading methodology. So I'd like to ask you, could you describe to us how do you actually view the markets and just share an overview of your particular trading style? So you've already mentioned it's trend following, but let's get into the nuts and bolts of it. So what actually is trend following? How do you view the markets? And just, give us a bit of an overview of your approach.
Sure. Yeah. So the basic ABCs of it, if I break it down into a diversified, systematic, long-term trend following, I'll break down each little sections. I feel like going like that is easy. It helps people follow along easier than it is just me spewing. I'm going left, right, back, forward. That people can't keep up. But anyway, so diversified. I mean, I take it from the. I'm on the stance that I want to be able to trade any trends out there. I want to be able to trade and profit from any moves in the world. Really doesn't matter. I'm not restricting myself to just stocks, which is the traditional approach, like the stocks and bonds and the real estate. I want to be able to trade currency trends. I want to be able to trade commodities and other foreign markets, foreign stocks, foreign interest rates as well, because evidence shows, you look back and do some research, that things outside of stocks and bonds move quite a bit. And why would I just want to sit in one spot and just wait for all the movement to come in those areas? Why not I branch out a bit and maybe open myself up to being able to profit from some moves like that? And what's happened over the past year has been a good example of that. Currency trends have been great since last summer, and energy as well. And then most recently, metals started to break down again. So if you're a traditional buy and holder, you just don't get those moves. Maybe you can apply your style to that, to those other markets and do okay. But, in the meantime, there's some pockets of time where you can't, because you're not open to them. So I like to be open to a lot of different things. To make a baseball analogy, if you're a hitter, you don't just want to be able to hit a fastball down the middle. You need to be able to hit other pitches in other locations, and if you can't play, because you're not good enough. So you need to be open to hitting different trends and different markets going different ways, and that's what kind of I feel. I like doing that because I don't want to be a stock picker. I don't want to be a picker in one area and try to trade every little wiggle in one or two markets. I want to be in a lot of different things and not really have an expertise in any. I just kind of want to just float along when the movement comes in different areas and just set my sails with them. So I get okay. So moving from the diversified to the I'll go to the long term first. So I don't want to be trading. I'm not a day trader. I don't really like to look at markets all that much during the day. Again, it's like quality of life. I don't want to be sitting in front of a computer all day long. I like to do other things. I like to get outside. I like to read and do things with my fiance, my friends, and family that don't require me to be sitting in front of a computer looking at my trading software or the quotes all day long. Like, I wanted a system that I didn't need to do that. And so I focus on long term. I focus on trading trends that my system on average, its average holding period is about 7-8 months long. So that's my average position that I'm holding. So I don't really need to look at it every 5 minutes. I don't need to look at it every 30 seconds. So I can update it daily, check it periodically, throughout the day if I'm around, but not an everyday thing. And I want to be there for the biggest moves too. The biggest moves exist on longer time frames, and that's what I like to be. I like to hit home runs, and I don't like to be a singles hitter where I'm trying to get wiggles every day like day traders do. They try to get a lot of little moves, during the day or during the week. I forgive that. I say you can have those moves. I'm not trying to catch those. I'm just going to try to be there for the big sucker that plays out over X months or years or weeks or something. That's just my style. And again, there's no right or wrong. I feel that my style works better for me, but it's not always the case with everybody. And then I guess, all right, so we have the diversified, we have the long term, we have the systematic. So systematic, I just create a method, a set of rules that decide, which markets to select, which markets I'm going to look at, and then which markets I'm going to trade, and then which market, and then position sizing rules. So how big and how small am I going to be in each market that I observe, and then when I'm going to get in and out. What kind of methodology. I kind of already said that I'm a long-term method guy, so in that case, my entries and exits are fairly loose. It takes more of a move for me to get in and out than it would for like a short-term guy. He's more tight. His entries and exits are tighter with the movement than I am. To make it, I guess, an example, like let's say I'm a breakout trader. I use a 200-day look back. So if the market makes a 200-day high, I'll get in. Versus a shorter term guy, which is, it wouldn't work. I wouldn't be able to follow a shorter term system that well, but just because my psychology doesn't really fit with it. But like a shorter term guy may go enter market on a 20-day high, so he's getting in and out much quicker. I like to be a little bit longer.
Well, let me ask you about the systematic side of things, because you started out as an accountant, then you became an analyst on the trading desk. At what point did you learn to start coding, or did you code, or did you bring in outside help? Like, how did you actually develop your system once you had an idea and some rules that you thought might be valid and have a edge that's worthwhile trading? How did you actually turn this into a functioning system that is essentially automated these days?
I old-fashioned way, I started with some pen and paper, and then I got into Excel. And I still do a lot of the majority of my systems in Excel because I like to see, like Excel allows you to go under the hood and kind of see what's going on versus a software which kind of just pumps out results. You don't really see what's happening. So I called a couple guys to help me, who I used to work with, who were more advanced with coding, and they kind of show me the ropes with some like Python software and C# and things like that. And that's all good as far as like testing goes, because you can be efficient with running a lot of tests fast. With Excel it's kind of slower because you got to it's just a little more detailed and not as not as advanced as some of the other softwares. But anyway, I called a couple traders who I looked up to, who Covell wrote about in his books, and then they kind of told me, like, look, we can code, but it's not really like a necessary skill to have. You need to have some sort of like basic, you can do everything in basic Excel. That's kind of why I started in Excel. So you can start there, and you can always stay there if you want. You don't have to go to the software route. So that's what I did. I got into Excel, just kind of started making it up as I went along to learn it, and didn't really have a guy there, sitting next to me while I built it up. and I designed like a risk sheet. So I had like a portfolio sheet, which is where I had all my positions. It had my position size, has where I got in, where my stop is, what the current price is, and how much money I have at risk, what's my P&L, and all those things that tied back into other sheets that I had for each market, which each market was just had the data. Then I had my position sizing sheet, like how big of a position am I going to take if I get a signal, all that. And so I updated that stuff every day. I had a new, every day I go into the market sheet that I had, and right now I have 40 markets, so I have like 40 different sheets for each market, and so I update the data every day, and then I see what my rules tell me to do. How do they change? Should I take a bigger position today if I get a signal? What's the new stop orders? What's the new buy stop? What's the new sell stop? When am I getting in? When am I getting out? Type of thing. So those, I started probably doing that sometime in 2009, 2010, and then just kind of made changes and advances along the way as I've gotten better at building these things, and I guess more comfortable with just how to do it. But there was really no fancy way. And you could probably hire someone to do something today or help you, but I didn't.
Okay, so I've just got a question around that. You obviously mentioned Excel there quite a bit. What sort of data were you actually putting into Excel? Was it like calculating anything, or had you programmed it to output certain data, or was it just you were just using it as a spreadsheeting tool to keep track of your positions and your trades and that type of thing, or was there something?
Now everything is coded and linked together. So I have a data software that inputs into the market sheets every day, and then from those sheets they spit out the new day's buy and sell signals if they are changed. Like a lot of times, since I'm so long term, they're not different at all. The new position size. I don't just have a summary sheet of like what my positions are, so I could see it all in one spot. That kind of auto populates from other sheets and things. So it's a whole big linked web of things. But I think you could start with a simple sheet of, if you do things by hand. If you're a non-systematic trader, you just kind of want to make trades, based on your gut or something, or do it another way. You can have a sheet that kind of organizes things for you, so you can see what it is you actually have on the books, what you have, that we don't have to remember everything, and that's kind of what helped me in the beginning, because if you want to be a diversified trader and trade a lot of different things, you need to organize this stuff, because there's no possible way you can memorize and remember everything about where every stop is, and what every position size is, and what's the proper risk management and position size to take in every market. You can't possibly remember all these things. So maybe you can, maybe you're smarter than me, but anyway, I like to keep it organized, and I like to keep it in front of me, so I don't have to remember it all, because I have other things to think about too, other than just trading.
Of course, very important to be organized, for sure. It's a big one.
Yep, that's what I feel this has helped me to do, organize, and I feel that's what a lot of good traders in general do. Especially the systematic guys, because they're computer nerds. They don't want to have things in their books that they don't they're not accounting for, or that they run the risk of not remembering, or maybe some of the traders of old that do it like that, where they're kind of just more on the off the cuff, they kind of see their statement and then they make other decisions. They kind of just on the fly of changing things and not really setting to a disciplined set of rules that hold them accountable to do what the rules say, and to organize them, and to face them every day. Some people don't want to face their statement or their summary of what they hold the positions are, because they don't. Again, going back to the Ed Secoda stuff, people don't want to feel the feeling of being bound by the rules that they set for themselves. They kind of want to do what they want to do, sometimes, and they don't want to obey the rules. Like dieting, same thing, people just go off the rails. So those things are, they won't appeal to everybody, but I feel that they really help me to, again, be organized and know what I'm doing. If I don't have this setup or something set up that tells me what to do, when to do it, and how much position to take, I feel that I don't know what I'm doing, and I'm going to freak out, because I don't like not knowing what I'm doing. I need to write things down, and I need to be organized and everything. So that's why I go with this approach than maybe some others.
Yeah, I think that's a fair point too. Really, it comes down to